So welcome guests and members. This is the September meeting of the International Model Investment Club. Just quickly go through our meeting introduction here. So we're a club that was founded in 2016. We use hypothetical money to avoid currency and exchange and tax issues because we have international members, and all our meetings are held online, and typically the third Monday of each month, but in December, because of the holidays, we meet on the second Monday. And we're primarily a learning club, so we try to follow better investing methodology and use the stock selection guide, and we have a portfolio that we manage. Currently we have 11 members from the United States, Canada, and China. And just if you are new, you're going to see a meeting panel here on the right hand side. You can post questions. All of the guests are going to be muted during the meeting, but at the end we'll open up the microphone and ask you for if you have any comments or suggestions. And if you want to ask questions, we will try to answer them as we go along. And just a quick disclaimer, all of the stocks that we're going to present and are for educational purposes only. We ask that you do your own research before actually investing. And some of the securities are definitely, some of them are held by some of our members. So just be aware of that. And we may show some websites, products or services that are not endorsed by Better Investing or the presenters. And this meeting is being recorded and will be posted on our YouTube channel. So with that, we will begin. And I'll close this. So quick agenda here. I just did the introduction. I'll be doing the treasurer's report, and then we are doing a semiconductor stock study. So we'll be looking at 3 companies and in the semiconductor space. And if some of our members are here, then we'll do these quarterly reports. And so Anitra, I don't know if, are you able to do Meta today?
No. I don't know, I thought I submitted that. But
yes, but will you be able to present it, I guess?
I don't think I'm ready.
You're not ready, okay. So I don't see Reddy Ganta here. He was going to present IRPR, and Jane, I know, has had a family emergency, so she will not be here. So I'm not sure if we'll get to this. So we could have a very short meeting today, or it gives us more time to present the stock studies. So with that, let me see if I can bring up the treasurer's report. Sorry, that's our, where's my, here we go. Okay, and let me just swap. You can see the a large, okay, these are my recommendations. Here's the treasurer's report, sorry about that. So this is our valuation statement, which we run every month before the meeting. And typically what I do is I've added $100, deposited $100 for each member, so that's $1,100. And so right now our broker, or our cash, is sitting at around 14,639. That's about 16% of the total. We have a number of stocks that have done quite well. IRPR at 29%, Meta is up 210%, ResMed, Schwab, and Vertex. And I know that Jane, I think, has done an analysis of Vertex, and she's recommending a sell. Now, two that are not doing very well are Disney and LGI Homes. So those are two that minus 18% for LGI and 25 for Disney. I'm going to be recommending that we sell those. We have the others are still doing pretty good. I just didn't highlight them because we'd have a lot of red circles here, but you could see Amazon is at 15%, Alphabet is at 16%. CrowdStrike, we bought that right after, right before the news about the bug that they had in their software, and so we bought it at 260 a share, we bought it at 360, and then it's now at roughly 260. So that's why it's down so much. But I think this one will recover. It just will take a little bit of time. CrowdStrike is a top company in its class, and it's a premier company, so I think it'll do well. And the same with NICE. These are just recent sort of price drops. And we just bought both of these, so I think we'll just wait and see. This is a kind of our picture of our portfolio. So you can see our cash pile is growing again at 16%. Vertex is our largest position along with Meta. Disney is only at 1.8%, and CrowdStrike is 2.8%, and we try to make sure that each company is a minimum of 5% of the portfolio. So because if it's less than that, it doesn't, whether it goes up or down, doesn't really impact the portfolio that much. So we need, I think, to add to CrowdStrike and then challenge LGI and Disney. Those are my recommendations. Jane is recommending selling Vertex, and as treasurer, I'm recommending we sell or challenge Disney and LGIH Homes and add to CrowdStrike to make it 5%. Right now the price is 267, so if we buy some more, that'll lower our cost base. Any questions? Okay, let me just. So
did we discuss selling Disney already?
We sold some of it. We didn't sell all of it. Yeah.
Got it.
I think there's a little bit left. Okay, so save. All right, so I'm going to now go to the stock study and have to keep swap the presentation. So this month's stock study is the semiconductor industry. We're going to be presenting 3 different companies, and Anitra will present Taiwan Semi. Mel, who's new to the club and is interested in joining, is going to be presenting ASML, and I'll be presenting Synopsys. So we'll start with a very quick sort of overview of the industry. I'll talk about current state, industry segments, growth projections, challenges and risks, and then we'll get into the actual stock studies. So the semiconductor industry is really at the heart of almost everything that's going on these days, whether it's smartphones, computers, cars, industrial equipment, the internet. Everything is you know, semiconductors are pervasive, and a lot of the driving forces behind that are AI, which we hear a lot about these days, 5G for communications, Internet of Things, which is I've seen things like new fridges now are connected to the internet, and if if you're running out of eggs or milk, your fridge will tell you, and will put together a shopping list. So Internet of Things is again, everything is connected, including a lot of industrial equipment and factories and so on. Everything is it's connected to the internet. Electric vehicles, and a lot of excitement around full self-driving, and then consumer electronics. Again, a lot of computers, gaming, that sort of thing. So the state of the industry in 2024, the industries are recovering from the COVID-19 supply chain disruptions. I think we're slowly getting out of that now, but that has created a lot of sort of shortages and delays. And it highlighted how critical this industry is globally, and how we rely on the supply chains, and especially around outside of North America and Europe. So there's a lot of reliance on Taiwan, a lot of reliance on China. And I think a lot of the geopolitical tensions that we're seeing between the US and China are causing investment outside of China and in North America and in Europe, to reduce the impact of the reliance on that region. So there's been a lot of increased investment in factories, and a lot of focus on innovation and technological advancement, because there's a basically a competition going on between the US and China to see who is going to be the leader in this area. So all of that is driving this entire semiconductor industry. The industry is quite complicated, and it can be sort of diced up and split into different segments. So you have design and manufacturing, and then equipment, and then testing and packaging and assembly. And then there are integrated device manufacturers. So if you look at design, for example, you have the fabless chip firms. So these are firms that design chips, but they don't actually fabricate. And they'll do a generic design, and then they'll go to these foundries here. And we'll talk about Taiwan Semi today, but there are others, Global Foundries, UMC, and so on. They'll go out to them to get their chips fabricated. But you have NVIDIA, Qualcomm, AMD, all of these are Marvell, Broadcom, and so on. All of these are chip designers. And then there are firms that are fabless non-chip firms, and so that they may not make their own chips directly, but they could, like Meta, Apple, Google, etc., Tesla, all those, it's a very gray area here, but theoretically or hypothetically, they don't make their own chips. They'll go out to somebody else. But as we've heard recently, Apple and Google and probably Amazon and maybe even Microsoft are designing their own chips now. They don't want to rely on other firms. They want to keep it in-house. And then if you're going to design chips, you need certain tools, and we'll talk a little bit about those when we talk about Synopsys. So this group here is Synopsys, Siemens, Ansys, ARM, Cadence. They all provide chip design software and tools. And then equipment. So this is equipment for making the chips, and we'll be talking about ASML later on. And so these are people that actually provide equipment that's critical to manufacturing the chips. And then you have the integrated devices. So Samsung, for example, they make a whole host of products from TVs to smartphones and so on. Texas Instruments, same, Intel, Micron, and so on. So that's kind of a quick overview of the different groupings within the industry. Some market projections. The industry is projected to have very robust growth over the next 5 years, and a lot of that again has to do with this competition between the US and China, and it's also driven by the AI, the need for faster chips and data centers to handle a lot of these large language models and so on that we hear a lot about. So that's these technological trends are really, pushing the growth of this whole sector. And it's estimated that globally the market will grow at around 7 to 9% per year for the next 5 years. Right now, the market is about 600 billion, and there are estimates that it could get up to 850 or $1 trillion by 2029, which is pretty significant. A lot of that growth will be dependent on how quickly people adopt this technology, and then is there, can manufacturing keep up with chip design? Regional growth, Asia is the largest player right now. So that's China, South Korea, Taiwan. And then again, US and Europe are trying to reduce their dependency on Asia and the CHIPS Act in the United States. So there's, going backwards here. CHIPS Act is trying to bring more onshoring of chip design and production to the US, and Europe is doing the same. Germany is, you'll find out later on. So this is kind of the market, the global semiconductor market in billions of dollars. And again, it's around 1.8 trillion globally, and about 13% if you take the growth rate from 2022 to 32, it's about 13.7%. Where is this growth going to happen? Well, 3 big areas. Automotive is going to account for about 20% of this growth. And then wireless communication, computing and data storage, so mostly data centers. And again, for large, all these large language models and cloud infrastructure. So those 3 areas are about 70% of the growth. So looking at companies in these 3 is probably a good thing. Some challenges. I mentioned the trade tensions. You have a lot of talk about tariffs, export controls, and so on. There's also a lot of regulatory challenges with regards to competition and monopolies. And there's a lot of that in the news these days. Supply chain issues. One of the biggest risks is that China produces about 60 to 70% of the rare earth metals, and these are the metals that are used in making the chips. So China is a huge producer, and they don't just mine the metals, but they also process them, and they have about 85% global processing capacity. So it's all well and good to say that you're going to build factories to make chips in the US or in Europe, but there has to, you need the raw materials. And so this is another area where it's important to look at is the mining and the processing. And maybe in the future, we'll do a study on some of the companies in the West that mine rare earth metals, and specifically places like Australia and Canada are have that that capacity. And then the third thing that will impact the industry is how quickly is innovation going to take place, and are people going to adopt this technology? I saw a report recently that people are not buying electric cars as quickly as was initially expected. And then, the adoption of AI into different parts of the economy, how fast is that going to happen? That's a question mark. And then if companies, don't keep investing, they're going to lose market share. And that's, a good example is Intel. They kind of fell behind, and now they're struggling to try to catch up to AMD and NVIDIA and so on. And this is something to be aware of and to look at is what are the, when we're studying these companies, is what are the R&D costs, what are the capital costs, because that's a double-edged sword. You could spend a lot on R&D and equipment and so on and capital projects. That reduces your profitability, but if you don't do it, you're going to fall behind. So it's a fine balance. So that's something to keep an eye on. And I think, yeah, that's it for me. So I'm going to pass it over to Mel. He's going to talk about ASML, and I'll drive the slides, Mel. But you can, and I'll mute myself here. But you can go ahead.
Okay. A very good introduction to what's going on in the semiconductor industry. One of Hanny's slides showed a company like NVIDIA that designs what a chip is supposed to do, but then they have to have somebody make the chip, and that is something like Taiwan Semiconductor. And Taiwan Semiconductor needs equipment to actually get the transistors on the chip, and that's where ASML comes in. So if you can, next slide, Hanny. Okay, so ASML, don't quite know what all it stands for. They're a Dutch company. They develop, produce, market, sell services to the chip makers, that is the fabricators. And ASML products are used by chip fabricators to mass produce patterns on silicon using lithography. Quick backup. ASML, along with Applied Materials and Lam Research, they all supply equipment that helps get the transistors on the chip. The others do it by either layering, deposition, or etching. But what ASML does is they use ultraviolet, extreme ultraviolet light. Well, they just use ultraviolet light on many of their machines to produce the patterns on the chip to get the transistor on the chip. And if you really want to get a lot of transistors on a chip, you need the technology that ASML has. And that's what's highlighted there. For the high performance chips, you want a lot of transistors on a chip, and there's no current competitor to ASML to make that kind of to make these high density chips. They also have what's called the deep ultraviolet lithography, used for other logic and memory chips. So they have other machinery other than their EUV. They also provide services to keep things going, and they have software to optimize their equipment. And I stuck this in just to notice that, you know, where are they selling their equipment? Taiwan, okay, like Taiwan Semiconductor. China, 26%. South Korea, which would be Samsung, and US, primarily to Intel. I have to imagine it's also to defense. Next slide, Annie. Strengths and opportunities. This equipment is designed to last 30 years. ASML has a huge backlog, no competitors for this advanced system. And something that Hani already alluded to, that these high-end equipment, this high-end equipment feeds into the gaming, Bitcoin production, EVs, you name it, Internet of Things, and especially the AI build-out, the things called the GPUs. That's what this high-performance equipment can produce. Continued upgrades will keep sales and margins improving. And of course, there's the recurring service revenue. So let's take a look at the weaknesses and problems. Next slide. So that's going backwards, Annie. Can you go forward? Whoops. Yeah, okay. All right. So, you know, we're talking about very expensive equipment, and although they have a backlog, it's still low volume. And I guess the point being, if a company is in a crunch, let's take Intel. If you heard the news today, Intel's really, you know, having a difficult time. Now, I think they're going to have to buy ASML's equipment, but you can envision a company that just might not be able to afford the expensive equipment that ASML provides. Export controls to China will impact revenue. That's a big one. That's one of the reasons why the stock price is down. Chip production is cyclical, and especially if there's a recession. And it's interesting when we look at the SSG, you'll see that the sales go up, sales go down, sales go up, sales go down. And ASML is dependent on a limited number of key suppliers, and so you could have changes, supply chain disruptions. Let's go to the next slide. Just some recent news. This perhaps is not surprising. The price has dropped, so it's 4 stars now on Morningstar. I think CFRA always had 5 stars on this, citing the unique position that ASML is in. Very recent, the Dutch government will require ASML to get licenses from Amsterdam. It's interesting. Up to this point, licenses were given through Washington. ASML says there's really no impact on future guidance. I think what you could read between the lines here is that the Netherlands wants to make sure they call the shots on their company, especially with the upcoming presidential election. I think there's some politics here playing into this. So next slide. I didn't have a chance to go through their equivalent of the 10K, but I can glean some things here from their second quarter earnings call. Most of the sales are for the non-extreme ultraviolet equipment. Okay, this is where they use the DUVs. And you can see there the total sales 6.2. Now BE, that's billions of euros. And you can see the breakdown there between the extreme ultraviolet and all of the other services that they have. Next quarter, it's expected to increase a little bit. The bottom line is they're building up to the fact that sales this year are going to be pretty much the same as they were last year. Some of the fabricators are just not ready to accept ASML's equipment, and so you've got inventory buildup. The number of EUV sales this year is going to be the same as last, and non-EUV sales are going to go down. So they're coming out and saying, don't expect a banner 2024, but they expect 2025 to be strong. And of course, the analysts kind of, I guess, hop onto this, and that's why you see the 4 stars and the 5 stars. They're expecting the future to be pretty bright. And although there's these restrictions on China, this is mainly for those expensive extreme ultraviolet machines that produce a lot of transistors on a chip. ASML still sells a lot of equipment to China, and that will continue. Value Line estimates that they think that this China, the problems with China will only impact sales at most 10%. But that's a risk we need to keep in mind. Let's see, next here. Now I'll go through some of the input for the SSG. This historical data, you can see earnings and sales have been increasing and historically quite dramatically. Both the pre-tax profit margin and ROE are greater than 15%. Debt to capital is less than 33%. Those are usually the criteria for what you would call a quality company. This is backed up by the Bakul ratios. The upper part was 30 out of 30. Total was 84 out of 100. And so I conclude that, yes, ASML is a quality company and deserves an SSG in a little bit more detail. Next slide, I'll go through the basic assumptions. I looked at certainly historical for revenue. I looked historical, 17.8. That comes out of the Morningstar data. Value Line projects 14.5%, and the 2-year ACE projection 15.9. I chose 14, kind of low-balled it, with the considerations shown before. You know, there's restrictions of sales to China, general cyclicality of the chip industry. If you read the news, you know, there's rumblings about, hey, maybe the Fed's going to be too late and we're going to go into a recession. And of course, the AI-fueled expansion, there's a lot of hype. Maybe there's more hype than expected. So that's for revenue. Next slide, please. Quickly go through here. Hopefully my time is okay. And again, my data sources there to get earnings per share includes actually using the preferred method, curve fit procedure, a lot of stuff there. They're all pointing to quite high earnings per share growth. I chose 18% per year, again, with the same considerations as I said with revenue, kind of a little bit arbitrary. I definitely wanted to be below the 20s that are projected by analysts. I just point out that for cyclical industries, they say, hey, your starting point should be the trend line. But I started my trend line at Q2, and you'll see that on the SSG. And let's see, is there anything else? Oh, next slide. Okay, we need PE projections. Value Line long-term average up till today. There's a new value line. It's lower than this, but 40. I chose 40 for the high PE. Now this is versus a 47 for 5-year average and 44 for sentiment. So I think it's kind of reasonable. An argument could be made for it being shorter. The low PE is consistent with both the 5-year average and the sentiment. Now, the low traditional price calculation, I thought that was a bit low, so I arbitrarily chose $500 for the price. I think Ken Convula would be all over me for not using the traditional way of doing it. I don't think it would make that much difference in the final result. Okay, I think that's it. Hanny, I think I need to go to my SSG just to show the result.
So you should be getting a message.
Okay, show my screen. Okay.
Yes.
And let me see can everybody see this?
Yes, I can see it.
Okay, so as I said, and I'll kind of briefly go through this. You can see then the historical sales that I used that I discussed before, 14% per year, 18% earnings per share growth. The evaluate management section shows, that this is a pretty good company. There was an increase in debt, which is why you see this hump here on debt to capital. Here you can see, as I indicated before, that historically this is a high PE company, 47.4, 24 low. But I used 40. That combined with the earnings per share projected out using my 18% comes out to a forecast high price of $1,695. Now the low price, if I did the traditional method, it would be $444. I chopped it off at 500, looking at the price trend. I don't think it's going to make too much difference. Now, based on last Friday's price, this comes out to be a hold. The upside down ratio 2.8 to 1. Again, you could play around with the assumptions, maybe get it above 3, probably get it even lower than that. But even with this, we see that you have over 100% appreciation over the 5 projected years. That's 15% per year. And that's reflected down here below where compound annual rate, assuming the high PE, comes out to be a 16.6% per year. If you use the average, 11.8%, still not too shabby. Anyway, that's a story on ASML, and certainly I'm open to any questions, although I guess we have to go on to other presentations. Okay, Hanny, that's it.
Yep. Okay, thank you very much. That was excellent. I have just one question, and I asked this question to the technical staff at Better Investing, and I still have yet to get an answer. When you look at the forecast average PE of 32, that's a number that shows up automatically, and I don't know how they calculate that. I've looked in a number of places. I don't know if anybody knows, but it's just it doesn't come out of the ratios here, so I'm not sure where they get that. But that's just a general question. Anyways,
yeah, right, and yeah, I'll be looking at that too. I'll be certainly interested in the answer. Very good.
Yes. So let me just, I'm gonna show my screen again, and Anitra, you're up, TSMC.
Okay. And before I get started, I wanted to tell Mel, I've heard Ken Kavula actually say use higher PEs. If it's a company that has higher PEs, then it's okay to use higher PEs in the round table.
Okay.
So I think some of the things he talks about, he'll say, you know, it's changing and we need to change with it or something like that over time, you know, because it's a lot is changing, or it's not so much a trend, it's just changing in general. So I thought that was interesting as well. Okay, I'm ready.
So go ahead, Anitra. You've got the.
Okay, I have Taiwan Semiconductor Manufacturing Company Limited. Next screen. And it was founded in 1987 in Taiwan. It's the industry is semiconductor and electronics, and its specialization is dedicated to semiconductor foundry services, which is also like a fab service. Their market position is the world's largest independent semiconductor foundry. And I actually enjoyed studying this company because I was so impressed as to what they do and what they've accomplished. Their key products are advanced process nodes, 3nm, 5nm, and 7nm for chip manufacturing. Their largest customers are Apple, AMD, NVIDIA, Qualcomm, and there are other global tech companies. Their market cap is approximately 500 billion as of 2023, and their CEO and chairman is CC, and I want to say, wait, and if I'm saying it wrong, I apologize. The revenue is 76 billion as of 2022, and they have actually not 65,000 employees, but 75,000 employees. Their headquarters, again, is in Taiwan. Next screen. The strengths are advanced technology leading in the 5nm and the 3nm nodes for high performance and energy efficient chips. The strong customer base, which we mentioned earlier, provides stable revenue streams. They have an efficient supply chain, strong supplier relationships, and ensure smooth production management. Their opportunities are 5G and Internet of Things growth, increased demand for advanced semiconductor solutions. Their AI demand is high performance, cutting edge chips for the expanding AI market. Their automotive growth is increasing use of semiconductors in electric vehicles and autonomous driving. The sustainability, which is they're very strong on sustainability, they focus on reducing carbon footprint, which should and could attract eco-conscious clients and investors. And that's a very good point as we know what's happening in the world. Go back. Their weaknesses, Taiwan Semiconductor's weaknesses and challenges. Their weaknesses are they have high capital expenditure, significant investments in R&D manufacturing, and manufacturing facilities are financially demanding. There's a dependence on key customers, which is a risk if major clients switch suppliers or reduce orders. And in particular, in the news today, Apple's i16 has a low demand, so that is going to, you know, put a dent in Taiwan Semiconductor. Probably not much, but something. Their geopolitical risk are that they're vulnerable to the tensions between China and the US, which could affect operations. And okay, we don't want that to happen. Challenges. The supply chain disruptions. As in COVID-19, it disclosed the vulnerabilities in global supply chains like we've never seen it before. So we know it can happen. Okay, there's intense competition, even though they're the largest, and I think they do it the best. There's a rivalry from Samsung, Intel, and others investing in advanced technologies. There is rapid innovation requiring continuous research and development to keep pace with fast changing tech demands and talent acquisition. They do have a difficulty in attracting top talent for cutting edge technology roles. And they do also try to constantly invest in, what would I say, new companies, IPOs, things like that, so that they can, uh, get on, ahead of the game. I think you have to go back one. I'm missing something. I think we missed the chart. Or maybe you're gone too fast. Okay, go back to the colorful one, please. The next. There you go. Thank you. Okay, second quarter earnings call. Okay, Taiwan Semiconductor beat second quarter earnings, and they hit the record in exports in August on AI, and in the U.S. at least. And they also report a 33% increase in August revenue. Okay, so that was good. That was the what was new in the news. Their exports to the U.S. are year to year 79.5, which is a record high. They announced a stock dividend of 0.6259, let's say 0.63, to pay that they're going to pay on October the 9th. The next earnings announcement is scheduled for January 16, 2025. Next. Here we are. That's what I thought I saw. Okay, here is a chart showing that over the last 5 years, Taiwan Semiconductor was down to pretty much right around 40 or so, and now they rose as high as $193.47, but they're down to 169 today. And as you can see, the PE ratio, which was as low as almost 10, is currently right around 30, but it had risen to 40. So the company is climbing. There is a lot of growth. There was a downfall, not actually during COVID. As a matter of fact, they jumped because of COVID, because everyone was home and there was a great need, and they were grabbing all the chips they could, or as far as making it. But they did go down in 2022 and part of, so 2022, yes. But they've risen very well. So it's something to watch. I think they're doing a great job. Next. Okay, here are some of the analyst reports that you usually are the most sought after. You have CFRA has them as 4 stars. Argus has them as a buy. Market Edge says avoid. I don't know why, unless it's the only reason I think that there's anyone would want to avoid it is because of the geopolitical concerns. Swab Equity Rating International is a B. MSCI is an A, and Morningstar, which we all know and love, is a 4-star with a wide moat. And then that's it. Then you have Refinitiv, which I'm not as familiar with, but I do have it on there. Next. Okay, I've heard a lot about Japan, Taiwan Semiconductor, building in Arizona, building in the desert, building in the US. But what I never hear people talk about is how they opened its first chip fabrication plant in February in Japan. which diversified its supply chain away from Taiwan. And they're opening a second plant right now, which, well, they're in the process of, which should begin the construction by the end of this year. Japan has been striving to strengthen its semiconductor presence amid intense rivalry with key chip-making countries such as Taiwan and South Korea. Next.
Anitra, you also mentioned earlier.
What? Oh, yes,
about,
Germany. Yes.
Yeah.
Yes. Thank you, thank you, thank you. Okay. They are building a plant in Germany, and see if I see where I have that. Oh, here it is. Okay, they also plan to build a specialty technology fab in Dresden, Germany, in partnership with European semiconductor manufacturing companies. And it's going to be called ESMC, as the one in Japan is JASM. So that's really interesting. So they are trying to strategically find footage in other countries in the event that, to soften the geopolitical tensions, I would say. Okay, here's the recent news. Stock performance. TSM stock recently experienced a decline along with other semiconductor companies like Broadcom and ARM Holdings. And I gotta say, Broadcom went up like 20% today. So this news is something that happened that I got earlier. This was partly due to a weaker than expected initial orders for the iPhone 16. Geopolitical risk. Once again, despite geopolitical risk, Taiwan Semiconductor is considered a valuable addition to investment portfolios due to its strong growth prospects and strategic positioning in the semiconductor industry. Future prospects, they are listed among the top stocks expected to perform exceptionally well over the next decade. Export control. The US is implementing a new export controls on semiconductors, which could impact Taiwan Semiconductor and other companies in the industry. These controls aim to limit China's access to advanced semiconductor technology. I think that's it for me as far as that.
Yes, did you want to show your SSG real quick?
Sure.
Okay, I'm going to make you a presenter.
Okay. And
you have to accept. You should get a message saying show your screen.
It's spinning. It's spinning. It's spinning, still spinning. Why is it spinning?
I am not sure.
Okay, that's okay. Let's see. Let me try this. Bear with me. Oh, wait a minute. Here it is. Show my screen. There we are. All righty now. Can you see my screen? I think you can, because I can see it under showing my screen. Okay, yes. Here is my SSG. Let's go to the first page. There we are. As you can see, they did go down from in 2022, as I said, but since then, since 2023, they have been up, straight, and parallel. If I said those words in the right order, their outstanding shares have been declining a little, but they're pretty consistent, but it hasn't gone down. This is the expenses between the pre-tax profit and the sales. And I forgot what this is. It's something. It's not. But there's a lot of room. They have a lot of expenses. But this is a large company, and they do take on the cost of what other companies would do in order to produce the chips that they do. All right. They have been very consistently growing, other than the drop. Where was a drop? No, as far as the sales, there was a drop in 2022. Yes, 2022 to 2023. So their growth has been consistent at 13.5%. I used the forecast of 15 between the analyst estimate, the Yahoo, and no, I'm sorry, let's see what it was. But anyway, I came up with 15. Their earnings per share has grown steadily. Once again, a drop 2022 to 2023. And a lot of people say, oh, this is COVID, this is COVID. I don't think it's COVID as much, unless it's the fact that the fact that there was a inventory loss and it just caught up with them there, because I always thought that COVID was around here, but maybe it just caught up with them there. I'm sorry, that's the earnings per share. The pre-tax profit went down a little in 2019. Go ahead.
Anita, we're kind of running out of time, so maybe just.
Okay, we're almost finished. Yeah. All right, they have a little debt, not too much. They have return on equity. Don't forget, we don't have a lot to go over tonight. And their pre-tax profits on sales. The second page.
Actually, the people that were supposed to present have now shown up. So.
Okay, here we go. We're speeding up now. It's a buy at 3.2 to 1. I only took out this very low PE because it wasn't consistent with the regular PE. So I used the high of 23. My high price is 342, which I'm sure I could have gone higher. And the low price, I used 120 because I think that 80 it just didn't seem consistent with the differences of the low. You said something about a 32. I don't see a 32 down here on my companies.
No, that number changes as you with different SSGs.
Okay.
So yours is 19 for the average. Yeah.
Okay, so the total return is 16.9, and the projected return is 13, and that's pretty much it. They're below their let's see, they're above quarterly, but the trailing 4 months is below the graph on the quarterly data for the trailing 4 quarters. Okay, is that it?
That's it. Thank you very much. That was very good.
Very welcome.
However, if Joanne was here, and we would be ahead of schedule, but I'm not doing a very good job.
You're doing a great.
So I'm going to share my screen.
Okay.
I'm going to present the third company, which is Synopsys. Is it up? Can you see my screen?
Yes.
Okay, thank you. So Synopsys is the third company tonight, and they provide tools for chip design. And oh, sorry. I apologize. Let me just do this, and then do this. Okay. And so chip design, there's two pieces to that. Well, first of all, you have integrated circuits and you have systems on chips. So systems on chips are components on a chip that will do a number of different things, as opposed to, say, a single integrated circuit. And there are two parts to chip design: electronic design automation, or EDA, and intellectual property. And I'll explain those in a second. So So what is electronic design automation, or EDA? They're software tools, and you can create circuit diagrams with them, and then you can use. So this is all done on computer. It's like a simulation. You can test the chip. You can change the physical layout of the chip to optimize it. And then once you're happy with it, you can again test it to see if it meets the design requirements that the end user specified. And then you can kind of do a model of that to be used for the fabrication. And so that's EDA. So it's basically a software tool to do simulation, to design the chip, simulate how it's going to work, test it all electronically without having to actually make it. And the key service providers in this area are Cadence Design Systems, Synopsys, and Mentor Graphics, which is actually Siemens. Now, what is intellectual property? And it doesn't have anything to do with the legal definition. So these are sort of building blocks that do a number of things, and you can take them and put them together like a Lego kind of toy. So if you don't want to design something from scratch, but you need certain sort of components on the chip, you use IP. So it's can be customized, and they're fixed designs, pre-made, that you could use right away. And then you can use that to actually fabricate the chip. So there's special companies that do this, and some of the ED companies, which is Synopsys, does both. Okay. Now, why do we actually have these things? Well, they streamline the design process and the analysis and the verification. It makes the whole process much more efficient. If you make mistakes, you're kind of doing it in software. You're not having to build a chip, test it, and then see if it worked or not. So it's a very efficient, effective way to design and manufacture semiconductors. Now, Synopsys is the #1 company in the world in EDA design, and the #2 in IP. So they're very important. Then this is taken from their recent 10Q, I think, or 10K, I can't remember. But you can see the growth rate is in the double digits, and their targets for 2024 are also in double digits. So this is for revenue growth, and then for earnings per share growth, 25% and 24%, almost double the revenue growth. And their business model is there's both time-based and recurring revenue. So they and once you buy their stuff, you can't really cancel. So once you've made a commitment, that's it. So their backlog is very stable. Again, this is some of their communicated long-term objectives, and so the revenue they're aiming for double digits in design automation, and in IP mid-teens, margins again mid-40s, unlevered free cash flow mid-30s, which is quite good, and then again EPS growth in the high teens. So pretty solid. I just wanted to talk about this really quickly. So I'm very familiar with ANSYS, which is it's a software company that does simulation and what's called multi-physics simulation software. So, for example, if you're designing a car, you have you have internal combustion engine, you have heat. So you want to be able to simulate the thermodynamics of that that process. At the same time, you might have the gas or other fluids that are flowing through the car, and that's fluid dynamics. And then you have a third thing, which is maybe the stresses on on all of the mechanical parts and the metal that's in the car, and that's stress analysis. And I've actually used ANSYS as a junior engineer, and we used to do these simulations separately, but now the software has advanced so much that you could sort of take all of these different multi-physics simulations and combine them in one large model and see how they interact with each other. How does the heat impact the metal fatigue and the fluid going through, and so it's very complex. And so ANSYS is a world leader in this area. Synopsys has put in an offer, and it looks like it's been approved by the shareholders to buy ANSYS for 35 billion. And I think that's if that goes through, it's going to give them a huge advantage going forward. And again, it's a lot of this is driven by AI and the domestic onshoring due to the competition with China. So that's kind of a quick overview of the company. Before I get into I just wanted to show this. So when I was trying to figure out what to put in the SSG, I did a number of different things. Some of this has been influenced by some of the things that Mel has been telling me or suggesting I do. So the green part is the earnings estimates from 2019 to 2023, and they're all the same because they're actual numbers. The blue part is earnings estimates from all of the websites that you can get through the SSG on Better Investing under the research tab. There's only a couple like FactSet and Value Line that you have to go out and get separately. So that's the blue. So what I did, and then there's also estimates for 2027 and 28, and there's some of the websites will give you the next 5-year estimate for earnings. So what I did was I took all of this stuff and I calculated an average. The average is going to be the same here because this is again actual, and I only went up to 2026. Then I did two things. In Excel, there's a function called forecast. And if you give it all these numbers up to the blue here in 2026 from 2019, it'll tell you what that growth rate is. You can calculate a growth rate, or you can project in 2028 what the earnings will be based on these estimates here. So when I did that, it's 21.4. The other way you can do it is you can take these average numbers again and you can put them on a graph, and you can do a best fit line through those points. And this is what I did here. So this is again in Excel. It's very easy to do. The blue points are the actual, and then the red are the forecast for 2024, 25, and 26. And then the dotted line is the best fit line through that. And then you can ask Excel to give you an equation. And Chris is probably laughing because he's a math major and he knows all of this stuff. But this R squared is the best fit coefficient, and it's 0.94, which it's not bad at all. So if you take this equation and in this where X is, if you put in 2028 or any other year in the future, you can find out what the EPS is. So that's just a different way of basically doing the same thing that this Excel forecasting function does. You can do it either way, and there's a slight difference between the two. Now, the other thing that I did was using using sort of different all of these methods. So I used so once you know what the forecasted earnings per share is, you can calculate a compound annual growth rate. So using the best fit trend line, when you calculate the compound annual growth rate, that's a 14% growth in earnings for the next 5 years. If you use the forecast function, you get 16%. If you use the preferred procedure, using a PE, a value line PE, which is 22 for earnings per share, value line predicts that in 3 to 5 years that the EPS will be 22.5. And then you can use the preferred procedure with a different PE, which I'll show you in a second. It's this one, basically, I got from the best fit line. You get different high prices, and I use the same low price, and I'll show that in a second. But the upside downside ratios here, are all, except for the value line one, it's 2.6, but the others are all above 3. And the total return is low. It's 9.9%, apologies, let me go back. So the total return is not 15. Now, in doing this preferred procedure, I took the value line data, so it's sales of 10%, 41.4 for pre-tax and so on, income tax rate 16%, and then and shares outstanding. So these are the values. Sorry, my mouse is sticking. I put all of those into the preferred procedure and came up with the high price and using 2 different PEs. But you can see that the highest one is if I use a 42 PE in here, I get 13.5. I'll show you all this on the SSG. So okay, we saw that one. This is the graph of the 5-year price trend. And again, similar to some of the other ones, it's going up. I took this line here at 385, which was 80% of the current price, but that was last week. The stock is up, so I think this number is now around 390, 400, something like that. However, this is a PE graph, and you can see kind of it's there's a support line around a 42 PE, but PE was up quite high in the 70s, and it's dropping quite a bit. So that's something to be careful of. And then Joanne actually did this. These are Bakul's ratios, and the company only had 5 years of data. So she put in a passing score of 30. Even if I put in 25 in here, it's 24. So it's kind of borderline. These 3 years are return on equity are below 15%. But they're pretty close. I mean, you could make a case, but the rest of the ratios are all green, which is and it gives a overall passing score of 94. So not bad. So that's the those are the Bakul's ratios. And now let me just take you through the SSG very quickly. I'm going to move over here. Can you see the SSG? I just moved it across to the.
Yes.
Okay. So I used the value line numbers, 10 and 17% as the compound annual growth rate, and it does give a buy, but I used the 385 that I mentioned before. But you can see here that the total return using the high PE is only 13.9, and really we are focused on getting about 15%. So this is a little bit low. I could make this, again, like Mel was saying, I could make it fit. I could get it up to 15, but I think this 42 PE is a bit high. I think the earnings are fine. They match with value line and other estimates, but 42 PE that you saw on that graph, it was going down. So I'm not even comfortable with this 42. And if I lower this, then we're down below the 15% even further. And again, this average forecast PE, I don't know where they get this number from, but it's 37.6, and none of these PEs in here the average out to that number. So I really have no clue where that's coming from. So that is it for synopsis, and that's it for our stock study this month. Any questions? Okay. So I don't know. Let me go back to, sorry. Where's our agenda? I think we have a little bit of time, but we have two, sorry, let me get the agenda for today. Chris, did you want to present Vertex while I look for the agenda? Is Chris here?
Yeah, let me pull it up real quick.
Okay. I'm going to make you presenter. And make presenter. Yes. Okay.
One sec.
Reddy is not here today, so he was going to present IIPR, and Anitra was going to present Meta, but we all had our hands full trying to do this industry study. So I think this Vertex is the only one that will do the other quarterly reports next month.
Yeah, yeah, so let's do Vertex. Yeah, I didn't do this report, so I actually don't know too much about it. This is like my first time looking at it.
Okay.
Yeah, we'll just go through it together. Yeah, so for the sales growth projection, the last SSG was 11%, the current SSG is 9.5%. The EPS growth in the last SSG in Q1 it was 9.9%, and then Q2 was 10.1%.
Chris, could you make that just a little
yeah,
bit bigger?
make it bigger, yeah.
Please.
Yeah, and then for the year-over-year sales growth, the most recent quarter, it was 6.1%, and the trailing 4 quarter was 8.8%. The year-over-year pre-tax profit percent change was negative 392% for the most recent quarter, and negative 95% for the trailing 4 quarters. And the year-over-year EPS growth is negative 495.5%, and then negative 115.7% for trailing 4 quarters. Yep, so the fundamentals seems to be deteriorating quite a lot. Yeah, all right, so the current PE from the SSG, can't be calculated because, let's see, why is that?
I think their earnings are negative.
Yeah, because their earnings are negative, yep. And then the average PE over the past 5 years, right? Yeah, it's 23.5, and then the relative PE is 2.33, which is taken from the PEG ratio. Yeah, and an upside downside ratio is 0.4 to 4 or 0.4 to 1, and then the compound annual return is 0.4%, and it's 3% using the high PE. So VRTX posts a big loss of $13.9 per share in Q2 due to in-process R&D expense from like acquisition, I guess. Yeah, so although VRTX is expected to have a small deficit, it should get back on track soon as they're like integrating and new drugs are launched. Product revenue is higher compared to last year's Q2 by 6.1%. Yeah, but it's still like lower than its trailing 4 quarters, so it's not growing as fast anymore, right? That's something to keep note of. Let's see. FDA recently granted priority review on a new drug application, and then intends to complete regulatory submissions this year in a lot of countries. Okay. So new drugs for treatment of cystic fibrosis.
Cystic fibrosis.
Or cystic fibrosis.
Cystic fibrosis, yeah.
Fibrosis.
I can tell you're a math major, right?
Yeah. Biology is too much. Okay, yeah. So they're aiming at like more than 25x, excluding US countries. Let's see. FDA also granted priority review, net product revenue, R&D, vast beyond.
Now,
Right,
without going through all of this, because I know that Jane did this report, and you're just doing it for her, but she is recommending a sell.
Yeah, she is recommending sell, and here's a checklist. Yeah, so her summary is based on a 9.5% sales growth and 10.1% EPS growth. I've estimated Vertex respective annualized return to be 3% and 0.4% using average PE. Yeah, so although their profits seem to continue to rise in the long term, if the pipeline materializes, she recommends selling 50% of the position, as we already have a total position of 15,000-ish, which is 16.7% of our total portfolio.
Okay. Yeah, and I think we have done quite well on Vertex because we bought it at about $212, I think, and I don't know what the price is now. I think it's like $485.
Yeah,
so
$485.
We did about 100. We got a 128% return in a very short period of time, because I think we first bought it in 2021. So that's pretty decent growth.
Yep, and then in the when to sell checklist, she highlighted these things, which I think are the reasons to sell.
Okay, so I missed what? I wasn't sure. Did she want to sell the whole thing or just half?
50%.
50%. Okay.
Yep.
All right. Well, thank you very much. That, I think, let me just bring up
the agenda.
Yes, I found it finally. Okay. I'll just make myself a presenter. Make presenter. Show my screen. I'll move this over. Okay, so that's it. So we will do now open mic for guests, and we will start with. We have a lot of guests today. Brian Koenig, who's a regular. Brian, you're unmuted.
Hey, Navy, I think that I'm going to put in for a master's course in learning SST tonight. All the presentations were excellent. Thank you.
Thank you very much, Brian. And thank you for joining us again. We'll have to make you a member at some point.
Yeah, I have to give up some other positions in order to take this to do a good job at it.
Well, thanks for coming.
Yes.
Okay, James Murphy, you're self-muted, or yeah, you're self-muted, James. Yeah, okay. All right, I will wait until James comes on. Jasper Cox, you're also self-muted. Okay. We'll wait for Jasper. Jocelyn Morris, you are unmuted by me. You're self-muted. Oh, Jasper's okay. Jasper, go ahead.
Sorry, what was the question?
Oh, just if you had any comments, suggestions.
No, I looked at the presentations and they all seemed fine. This is my first time joining the group, so I joined to observe and to get more information.
Okay. All right. Well, thank you for visiting us.
Okay.
Okay. Serena Peng, you are self-muted. Serena. Oh, okay. You're sorry. Try again.
Hello.
Yes. Okay, we can hear you now.
All right. So I'm just learning my second time joining the club. I do enjoy today's studies. Hopefully I will continue and to learn more with you guys.
Okay, thank you very much. Thank you for visiting. And finally, oh, I think that's it. Let me see. Yeah. James Murphy, we got, okay, Jasper. Okay, I think that's it. And so now we will get on to club business. Any motions to buy or sell? Well, we have a motion to sell 50% of Vertex. Sorry, so that's. I'll let me go to my iClub, and I'll send that out. Any other motions? No motions. Okay.
Am I allowed, this is Mal Krotzer, am I allowed to make a suggestion? Or
Yes, absolutely.
talked about perhaps putting in more money on CrowdStrike?
Yes.
So I think that's with the price down and the fact that they're the premier company in this space, I think consideration should be given to putting in more money, since we do have a lot of cash.
Okay. All right. Anybody interested in buying ASML or Taiwan Semi? If not, I'm going to make a motion to buy $1,000 of each one, but I need a second. So that can be Mal. Unfortunately, you can't vote yet because you're not a member. But Piero,
Yeah.
Mina, Jay is here, Isla.
Hey, Nate.
Yes, sir.
I have a couple of questions about
ASML, TSM, when they were being presented, but I just never asked. Before we buy, I hope I can make my objections.
Sure, of course.
Okay. You want me to do it now?
Yes, go ahead.
Oh, okay. Well, you know, for Anitra, for the TSM, right? She had an earnings per share estimate of about 21, 22. What all the analysts were saying, 15. Why did you go for that? That's the objection there with TSM. ASML, the technicals are arguing against it. The 50-day moving average crossed the 200-day moving average on the downside. This is usually called the death cross. The 20-day moving average crossed the 200-day moving average about a week ago. So again, that's bad. So if we're going to buy that, I would delay it. I wouldn't buy it right now. I would wait until these technicals bottom out, then buy it much lower. For SNPS, the technicals are arguing against that one as well.
Yeah, no, I did not recommend that we buy that at the end of my presentation because the I think the valuation is a bit too high, and I think the PE is going to continue to go down. So so that one I wouldn't recommend it. But the other two, Anitra or Mel, do you have any comments?
Yeah, this is, well, go ahead, Anitra. I have a comment.
My 5-year average high PE was 27.6.
No,
current
your growth rate.
Growth rate
For earnings per share.
Okay, first rate. Sorry about that. The growth rate for earnings per share.
Yeah.
All right, let's see. So that's the preferred growth calculation.
Anitra, sorry, you're breaking up a little bit. I don't know if you changed. Yeah, did you change microphones?
No, I'm still on the same one. Let me put on my other headset. Let's see. Let me get off of these 1 second. Hello, can you hear me?
That's better.
Is this better? Okay.
Now, what did you have? I can put these numbers in for you if you like. What did you have?
Okay. The preferred procedure growth calculation, which we kind of went over as a.
Sorry, what did you put in for sales first?
For sales.
15.
15, yeah.
15%. Okay.
Yeah.
21.6 was the 21.6. We went over the numbers, Joanne, Haney, Mel, and I, and we came up with 15 for the 5-year projected growth rate, 59, not 43.5 for the less expenses, the pre-tax 5-year average pre-tax profit margin, 15 for the taxes, nothing for the dividends, and 52,000 for the shares outstanding. And that's how we came up with the 21.6.
Yeah, but the analyst is saying, well,
if you change the judgments, it came up higher. And again, I had help with this because I generally would do the basic, but I'm learning that sometimes the preferred procedure default calculations are not that they're not accurate, it's just that that's not exactly what the trend is or whatever. So
okay,
we went over it, and again, it was 15, 59, not 49, 59.
Oh, 59, sorry.
And there's the 21.6.
Yeah, but you know, the analysts are saying around 15, right? Morningstar is saying around about 15.
I get it. When I originally did it, mine was 17. I chose 17, but I did it as a team with the group. I get what you're saying. So I can't answer it because one of the people that were a part of it isn't here today.
Yeah.
What did we say for the high PE?
The high PE was 23.
23. Okay.
Now, I chose by myself the low price of 120. That was my decision alone.
Okay. 120.
And honestly, the more people who are most knowledgeable do change the preferred procedures. They go in and they look what it really should be. I haven't learned that yet, so I experienced it, but I'm not comfortable with it. But I understand it, and it gives more of a true number. So yes. So anyway, there you go, 32.15. That's how I came up with that.
And,
I did take out the 9.2, but it's not necessary.
yeah, this is an ADR, right? So
It
we
is an
had,
ADR.
yeah. So we had, I can't remember. Yeah, value line is projecting somewhere around 12, and we've got 14.7. And for sentiment, for earnings per share, they're projecting 15 roughly.
Now there's a new value line that came out on just the 20th. So we didn't use that value line, I must say. And the new value line is down to 11 for sales and 14.5 for earnings. But since it was so close to everything that we put together and that I put together, I did not go ahead and change it. You know, that wasn't a big difference, but
Yeah, it's actually, I'm just looking at the value line.
the new
You
one.
said September 20th, right?
Okay, got it. I
Which is
see
actually
11 for sales.
which is in the future, but
Okay,
because
okay.
today is the 16th, so I'm not
You're
sure.
right. You're right. You're right.
But they have earnings per ADR is about 12.
Why
But
do you
I
say
mean
that?
that's 12 and 15 are you know,
Close.
it's close.
Yeah. Close.
Yeah,
Mm.
it's, you know, because we're making a lot of assumptions here, and you know,
Oh, I see the earnings per ADR. Okay, okay, got it. Okay.
yeah. So I don't know. I think like the question, I get your point 100% about the technicals.
Yeah. Yeah.
But both these companies are, you know, they're very high quality companies. Even Synopsys, I just think that the valuations may be a little bit high right now. Now,
Yeah.
if the Fed lowers interest rates, what's that going to do? Are we going to see, you know, stocks go up, and these numbers might go up further?
Yeah.
I'd like sorry, go ahead, Mel.
Yeah, on the technical, I don't know to what extent IMIC uses technical analysis. You know, I think fundamentally, as Annie was saying, these stocks are projected to really increase and go up dramatically here in the coming years because of the demand. There are some near-term problems. And I guess since the club only meets like once a month, I just don't know where technical analysis can really play. I mean, you can argue that, oh, okay, let's wait another month. But all of these stocks, these chip stocks, have come down dramatically here in the recent history. And as a matter of fact, if you look at if the price traces for the last, I'm going to say 6 months, it's a yo-yo. All right.
Yeah.
And so I guess I would be hesitant to make a buy or sell decision on the technical analysis, I guess is my 2 cents worth on that.
Yeah. Well,
I appreciate that, making that into play, but that's my feeling about technical analysis in relationship to the stocks we're talking about.
yeah. Okay. But Benjamin Graham one of the value investors, one of the famous value investors, has said the stock market in the short term is a voting machine, but in the long term, it's a weighing machine, right?
Mhm.
So what he meant was that in the short term, the stocks that are popular, all the lemmings are going for, they're going to be pushed way up. The price is going to be pushed way up. If you keep following the lemmings, well, you do that until you go over the edge. In the long term, the stock market is a weighing machine, meaning that it's going to look at the fundamentals. Are their sales justify the earnings, profit margins, pre-tax profits, all the margins? So in the long term, it's fundamentals, but in the short term, it's technicals. But you buy in the short term. Don't buy based on the technicals. Everybody's a lemming. They're all pushing the price up. That's why you have PEs of 52, 53, huge PEs.
Well, the reason that the PEs are high is because the earnings are growing at a pretty good clip, and these are they're pretty high quality companies. So that's
Yeah, but hey, nothing lasts forever, right? Now, what's it called? TSM, right? I was looking at a broadcast earlier today, said, things will continue for a year, maybe another year and a half, but then it cannot, right? These are companies that are in the trillions of dollars, worth trillions of dollars. Just a large numbers argues against these constant increases in earnings. Now, some of these big, what is it called? The Super 7, whatever the heck it's called. Some of these
Magnificent Seven.
Magnificent Seven.
Magnificent Seven.
Yeah, these Magnificent Seven companies, they just missed slightly, like 2% on the projections, and their prices dropped. Why? Because all the lemmings are saying this is what they should be earning, and they slightly underperform, and the price drops. Don't be a lemming, go over the cliff, right? So if you want to buy, I wouldn't buy right now because the prices are all inflated. Historically, the stock market as a market has a PE of about 16, 17. Right now, you look at the market PE, it's about 27, 28. It's all overvalued.
Yeah, I agree, but if you historically go back and look at, say, Amazon,
yeah,
Amazon was never ever a buy on an SSG ever.
Yeah,
it didn't have earnings.
Yeah.
It was, the PE was out of whack.
Yeah, it was too high. Yeah.
And like if you look at the price chart on Amazon, it's done quite well. So
Yeah.
I think I get your point, but I don't know. Like, you can't really predict the future. If I look at, let me show you this this chart.
Yeah.
This is Taiwan Semi.
Yeah.
Okay, this is a 2 standard deviation Bollinger Band.
Yeah.
And the price is at the midpoint, which is not bad because if it goes up this way, it could drop for sure. So maybe, and let's look at ASML if I can get that up. See, ASML is actually on the Bollinger Band. It's below the midline, which is that's where you want to buy it, is on down here somewhere, and you're not gonna get hit the bottom 100% of the time, but look at the drop here. It just dropped quite a bit, dropped some more, and it's near a low here. So one thing we could do is buy it in don't buy it all at once. Buy it by a little bit at a time.
Okay.
Dollar cost average.
Yeah. Okay, but Haney, I'm saying, take a look at the price, because the price I think is very high. If you want to say, we're going to buy it now and hope it goes higher and then get out, your time in the market, you're going to be being a momentum player, right? So you're going to hope to get out before the thing comes crashing down, but it's difficult to do.
Would just take a look at. Do you see the chart that I have up?
Yeah, I see it.
Yeah, so the high was 1119 or so.
Yeah.
And well, 110. So that's let me just 1110, and the low is and right now it's at 803.
Okay.
So that's a 28% drop.
Yeah, but if we get in now,
right?
okay.
So it's already dropped 28%.
Yeah, but this might be the beginning of the kind of the fall, right? So you're hoping that we get in now and get back up to 2111 or 2119 or 1119. You're hoping
But
it's going to
can
go.
I make a comment? Can I make a comment?
Yeah.
Listening to and reading some other things about industry, almost everybody in the industry thinks that chip industry is heading for a kind of a mini recession.
Yeah.
So that companies will not be buying chips in the way that they have been. The big ones, Meta, et cetera, have bought a lot of chips, and so their revenue went up. But nobody has really good programs to deal with these new chips. So all that AI stuff, there isn't a lot of stuff that people can actually use. Regular people can actually use. So there's not going to be a lot of sales of chips going forward.
Mm-hmm. Mm-hmm. Yeah. You know.
That's one.
And Meta and them have bought the chips that they're going to buy, and now they're trying to figure out exactly how to use them and how they can present them to their customers and how they can make people pay them to use them. But while they figure that out, the rest of us are not going to be buying any of those kinds of chips. And so the revenue is going to stagnate, and in fact, it's going to go down to some degree. And this is what they are expecting. This is what they're saying about their industry.
Yeah. Yeah. You know, I would just wait. Just wait a little
So
while.
yeah, it's
Price
not
to drop.
something that I want to, it may go up at some point in the future, but I think it has a little more of a trough to hit before it starts to do that.
Yeah. 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 I also understand NVIDIA has a problem with its new chip. What is it, Blackwell or something like that?
Yeah, I mean, come on, it was wonderful to think that NVIDIA was going to change the world.
Yeah.
But they designed the chips. What happens if you get it to the manufacturer and the manufacturer cannot actually make it in the way that you designed it? And then what happens if all of that goes well and you have Meta wants to have a chip made in a certain way, and Google wants to have a chip made in another way, and Microsoft wants a chip made in another way, because everybody wants to be proprietary about their chips, and Apple wants their chip to be a whole different thing, and you can't make all of those chips like that.
Yeah. Yeah.
And then they don't work,
Well,
it's just, the whole thing right now is much more of a guessing game than it has been in the past.
Guessing game. Yeah. You know, the other
I
thing.
don't. Well, hold on a second. I disagree with everything you just said. So the whole, first of all, it's not a guessing game at all. The whole point, like if you look at Cadence Design, Synopsys, the tools that I talked about, that eliminates the guessing game. So you design these things on in software, you test them in software, and if the design works, then you go to production. That's the whole point.
Yeah, I'm
right?
not saying that. That's not what I'm questioning is that I think that certain large companies, the ones that were making the majority of the purchases, the really large purchases, some of these $1,000 each. So how many companies have money to buy enough chips to put up a data center at $40,000 each? Not many. You got Meta, you got Google, you got Microsoft, you got a few that can do that, but only a very, very few. And my question is not how the chips are designed. My question is about, what does Meta want its chips to do? What does Microsoft want its chips to do? What does Google want its chips to do? And how do they want them to be? Do they all want to use the same chip? I don't think so.
Yeah.
Well, if they
I think
do,
they're going to want little different things here and little different things there that are going to make it difficult to produce these in mass.
No, it's not difficult at all. That's the whole point of these software tools, right? That's the whole point.
But what I'm not talking about is the actual physical making of the chip. What I'm talking about is what your customers want on the chip, and how they want their chip and Meta, my chip, to be different from Google's chip.
So
I want my chip to be different from and different from Microsoft's chip.
Yeah.
To defend the company that I just did a study on, that's their whole line of work. That's what they specialize in, is making the chips proprietary, as you said, for each company. No, they're not going to be the same for Google, the same for Apple. It's going to be different.
Right.
They send the
Be different for each
design
one.
and they develop design, they do the research, they manufacture it, they package it, they test it, they sell it, the color filters. They do all that. They do a bipolar mixed signal, embedded member, radio frequency mixed signal, metal oxide semiconductor logic. That's what they do. That's why they're so great. So to defend the part.
Right, but my basic question again is, many of these companies, the number of chips that they're going to buy, there's going to be a slowdown in tech spending for a lot of companies. The bigger companies, the ones that were mentioned already, they're the ones that are going to buy those $40,000 chips. Not many others are going to be buying those chips.
Yeah.
Well,
So, you have to think, hopefully they're making other kinds of chips that smaller companies can also get. But the big companies, the big chips that they're talking about with the AI stuff, those are $40,000 chips. And how many of them do you need to run a data center?
A lot.
And not many can afford to do that. And there are just not that many programs out there for the use of that AI technology. Companies are still trying to figure out how to make AI work for common, normal people.
No, well, I disagree with that as well. Sorry. So the what you don't hear about, okay, and what's not in the news is all of the AI that's being used in defense. And there's a huge war going on right now between the West and Asia, specifically China, in this space. And that's not talked about openly, okay? But if you look at all of the defense infrastructure that the United States have, nuclear submarines, stealth bombers, et cetera, all of that is running on AI. All of that is running on very sophisticated chips. And they're not sitting still waiting, for Meta or whatever, Google to order chips. They are going out and they're engaging with these companies to develop the next thing. And you cannot stand still in this space. You have to constantly innovate, because the product cycles are so short, and you can make some minor modifications to things, and you can have some pretty significant advances in a short period of time. So I think, I don't disagree with the fact that we might see, a 10-15% drop. I don't know. No one can predict that. But I don't think that, I think long term, in the next 5 years, you're going to see some pretty incredible stuff that will blow your mind. That it's in the defense space right now, and then eventually it gets into the commercial space, right? But when that technology becomes obsolete, which could be like a year, it could be 6 months, then it's given out to to public companies to take and to use. But it's a very dynamic thing.
It is, which brings me to another point about margins. The more money you have to spend on R&D, the more that hammers your margins.
Right.
Yeah.
But and that's true.
Also, some of the
I would just
companies are making their own chips, like Amazon. Amazon is making its own in-house chips. And
they're not producing the chips, right? They're
designing them and they're giving them out to the people who actually make them.
If they need to design chips, they have to go to Synopsys, Cadence Design, Siemens, and get the software to actually design the chips. So they're going to buy that, and then they're going to go to Taiwan Semi. They're going to go to ASML to get them made, to get them
actually made. Right. Yeah.
Right.
It doesn't matter if Apple wants to have their own chip or whoever wants to make their own chip. They still have to go through these companies to get them made.
Correct.
Because Apple can,
They're fabless. They're called fabless. So if they're going to fabricate their
NVIDIA
own
is a
chips.
fabulous company. They don't fabricate, they just design.
That's correct. They go to Supermicro
Right.
to get their stuff made. So, but I don't disagree that there could be a recession in this area, i.e. the price could drop by 10, 15, 20%. I'm just saying.
I just think they do that the chip industry is a cyclical industry anyway, and it goes up and down, up and down, up and down, up and down. Period.
100%.
I would
Just
like to say,
always. I mean, and there may be somebody may say, well, it's going to be a chip recession this time because of this. But in reality, I think it's just the way that industry runs.
But
There'll be a
take a look
time
at
when everybody wants to buy, and then there's a time when nobody wants to buy.
take a look at
well, right
take a
now
look
it's
at
down. Right now it's
Right.
down. So that's the whole point. Whether it might go down further, perhaps. That's why I think there's a logic that says buy a little now, and if it looks like when the dip is down that it's going to go in the future, maybe buy some more. Now the counter argument to that is, oh, you're trying to catch a falling knife. I think that's the point being made here.
Yeah, make you bleed.
Then again, you look at the fundamentals, chip and Haney's point, it's not only the Apple and the Microsoft, there's the defense, and then there's all the other chip foundries. I mean, I saw a number like there's 50 different chip foundries, smaller ones around the world. So these are all growing. And although I don't have a knowledge about all these other chip fabricators, it just seems that we're going to need chips for the future. We need chips that have high quality, high density. And the companies we were talking about tonight, Taiwan, ASML, Synopsys, they're in the right spot. And they're all down now. And this is the time to put in a little bit of money. That's my 2 cents worth.
Yeah, I mean, look at if you can see my screen, look at the chart for ASML, for example, right? This is a 5-year chart, and it's a cyclical industry, and we've gone through COVID and, pre-COVID and all of that, but essentially it was down here. The low was 191 and the high was 1114. And it's primarily going up. Now it's gone down, okay? I would say that it would make sense to buy something here. And then if it drops again, then we haven't put all our eggs in one basket. We wait and then we buy some more. And that's how you dollar cost average. But you can't time the market. We don't know when it's going to go up or down. All I know is it's down 28% from the high right now. So, that's a good a good point to dip your toe in the water, buy a little bit, and then wait and see what happens. Let's not buy the whole thing right now, but at least, if we can't predict the future, that if it's down 28%, it's not a bad time. So anyways, that's my 2 cents.
Sure.
Okay,
I have
with
a
that,
conversation. When it was low, when it was down to 500, 600, 700, why wasn't anybody having a conversation then? If it went up and it's going back down, you say this is a good time to buy. When was it a good time to buy, if not now? Because nobody was looking at it before, and now we're looking at it.
okay, so how about if I'm gonna make a motion to buy $1,000. We've got a lot of cash, right? $1,000 of ASML, and
How much is ASML? How much is ASML?
right now it's 804.
So what do we get?
804.
A share and a quarter?
Yes.
Yeah.
Would you like? We can make it 2 shares. 2 shares. I can say 2 shares instead of $1,000. Buy 2 shares of ASML, and let's look at.
It's 169.
That's a lot of work to follow something for 2.
Well, from a dollar perspective, it's we're looking at it from a long term, right? So from a dollar perspective, we're putting in a certain amount, and then as per Piero's recommendation, wait and see in case it goes down further. If not, if it does, then we buy some more. So it's not buy 2 shares and stop, but we're dollar cost averaging. Anyways, I'm gonna make a motion to buy 2 shares of ASML. And do I have anyone seconding? Mina, Joel, Anitra,
I'll second.
Mina. Mina will second. And if you don't want to vote for it, you can vote against it, and that's fine. How do I? Okay, so I just did that. Simple majority. I'm gonna. Christopher, define voting method by member, 1 provision. Okay. Okay. Save motion, notify members. Oh. Okay. It should have gone out. If you check your email, it's gone out. I'm just going to see what Taiwan Semi looks like. TSMC. TSM.
Before the pandemic, it was $19. You know, it was about 35.
I will say I'm glad to see Taiwan Semiconductor moving some of their manufacturing out of Taiwan.
Boundaries,
because I think it's clear that at some point China is going to invade.
2027 is the date that Xi Jinping said he wants Taiwan resolved.
He said before he leaves office or something like that.
Yeah. They need to get as much as they can out of Taiwan. If they want to continue to do business, they got to move some of their stuff out of Taiwan if they want to try to avoid too much difficulty.
And they're already pushing in the sea around the Philippines. So they're beginning to be more aggressive.
Yeah.
You know, geopolitically.
Does anyone know where there is a nuclear bunker nearby?
Why, you want to go hide in
it? Well, Haney, we're within about 100 miles of the United States. There is the bunker.
Yeah. I think we're
I think it's $1 million. It's about $10 million per spot.
Yeah.
Oh my gosh.
Okay. So I'm going to make another motion to buy. I don't know, what is that? That's 1,000.
ASML.
TSM. Sorry.
Oh, I thought you just did TSM.
No, that was ASML.
Oh, okay.
I'm gonna say 6 shares. That's about $1,000. Excuse me.
No, ASML is the one that's 800 and something.
Right.
Taiwan
The proposal is to buy
Semiconductor
2 shares. Proposal
of
is to
A.
buy 2 shares of ASML.
Right. The higher would be TSM because TSM is only 169.
Right.
6
So six shares,
TSMC.
which is about $1,000.
6 shares of ASML is about
No,
what?
6 shares of
4,000?
6 shares of Taiwan Semiconductor, 2 shares of ASML.
Oh, okay, got it. 6 shares of Taiwan
Yeah,
Semiconductor is about 1,014, 1,015,
right.
1,014
And
and probably 45 cents.
Does anybody want to second the motion?
I'll second.
Okay. You said you didn't want to vote for it.
Well, I don't
Well,
really. But
it's not,
it's
we're
not
not
that I do
voting.
not believe. It's not that I do not believe in the chip. I just know they're very cyclical and they're going to be up and down. And we'll have, or maybe unlucky, we'll have another opportunity to buy more.
Okay.
And hopefully somebody will figure it with AI so that the rest of us can use. And then maybe people can really make money on this.
There you go. I think the banks are getting into the AI thing before the rest of us. That's my
Oh, for
2 cents.
crying out loud.
Yeah, I don't
Jeez, have
think,
mercy.
yeah.
Right.
Okay, and a third motion.
So they're going to make all of my information just be even more hackable. Is that what's going to
I
happen?
know, I was thinking about that. But one thing about it, if we're going to go into this business, then we need to start looking at cooling plants and other things that support this industry.
Yeah, there's something called liquid cooling that's coming up. That's a new new way to cool a lot of these data centers, reduces cost, and it's much more efficient than
Well,
current.
computers there have been a lot of PC computers that have been liquid cooled for years.
Yeah,
Not with the need that they need for AI. And that's one thing that Ken Kavula said he's really trying to dig into the liquid cooling. He mentioned that.
Well,
I,
I think it's going to use up a lot of resources. That's the other thing. Running
Yeah,
those data centers is an expensive proposition for
yeah, it
where
is.
they are.
yeah, there's a company that does liquid cooling. I can't remember the name of it, but I'll dig it up. I'll find it. Okay,
And they
the
do
last
liquid
motion
cooling on a mass scale.
on data centers. Yeah,
Okay, all right.
yeah, for data centers.
Okay.
The third motion I was going to make was to buy
Oh, there's a third?
$1,000. Yeah, I was gonna say we could buy $1,000 of CrowdStrike because it's down right now after the
Oh, I'll second that one.
okay.
Because CrowdStrike is good business.
So okay, and same thing, simple majority, 24. Okay. Okay, so you should get a third email. Oops.
Okay.
Notify members by email.
So we need when do we have to vote on this by?
I made a mistake, so the first and the last you have till Friday. The middle one, I think. When is the date for that? Current
TSM?
motions. TSM 1624. So I'll change that. Edit. I'll change the. Oh, you may not edit a motion once voting has begun. Okay, sorry. So on TSM we have to vote today. Otherwise.
Today.
Well, 1624 is next Tuesday. You say you made it until 1624.
No, today is 9/16.
Yeah, 9/24. I thought you said you did it till the 24th.
No, 24th is, let me check. Sorry, maybe I read it wrong. Oh, no, you're right. 10/16/24.
10?
That's what it says here.
Oh my, oh my.
Yeah, so we've got a bit of time.
At least it's before the
Wait,
next
when is our
meeting,
next meeting?
the 21st of October.
Yeah,
Oh, good, just before the next meeting. Excellent.
yes. Sorry
That'll
about that.
work.
Yeah.
No, I was going to ask you if you had learned how to do all this before the meeting tonight, because I mean, other people usually do this and they know how, you know,
He's
when you're
doing
learning
a
new
No,
great
things, there's always
job.
little
He's
things that
doing a
happen.
great job.
He's doing a great job.
Yes,
Glad
he
I
no,
don't have
I
to do
know,
it.
I know how to do it. It's just that I didn't look closely enough because it's it defaults to the next month, I guess, the next meeting. So
Oh, okay.
I
Well,
could have made it shorter, but
right.
anyways, once a simple majority
Wasn't that
is,
one of the things we were fussing over?
yeah,
The voting was
yeah,
too long and people weren't voting and blah, 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 blah. So,
yes.
but you know, fine.
Okay, we
No, it's
have
fine. It's fine.
we
It's
have
fine.
one more thing to vote on, and we need Mel to exit so that we can vote on him.
Okay.
Yeah, on
Okay.
his. So Mel,
Okay, I'm out of here.
Did we vote to sell Vertex yet?
I'm out
oh,
of here.
sorry, I did not, did I do Vertex? Oh,
Oh, Vertex, right. Oh,
yeah,
yeah. Okay.
sorry, hold on. So sell,
Okay, Vertex.
sorry,
I definitely agree with that. You know, I wonder about if
sell,
Vertex bought a company, if Vertex and then had to take a write down on this huge R&D expense. So did the company not tell you something, or did you not do your due diligence on this before you pull the trigger?
yeah,
Go
one of the two.
forward with that. One of the two or both of them not quite kosher about how that went on.
Usually when you buy a company, there's a clause that if you if you don't divulge in good faith and something comes up
Stuff, yeah.
later, they can come back and modify the price. So I don't know if it was,
Yeah, they had to put that in too.
yeah.
They're
Okay,
stuck and they're
so
now taking a charge. So, you know, whatever.
Chris, are
So
you
yeah, let's sell Vertex.
Chris, are you gonna second that motion?
Yeah, I can second it. Yeah.
Okay, and I'll do the same and email and okay, it's gone out. Okay, now we can ask Mel to leave. Sorry,
Yeah,
but thank you very much, Mel. That was a good
Presentation. Thank you very
presentation.
much.
could I just ask a question?
Yes.
Yes, please.
Yes, I thought going in here that you were going to look at selling of Disney and QLYS.
Wallace. Yeah.
Wallace,
So
we should have.
we in order to do that, we need the people that are following those two stocks to generate the list, this sell
Okay, so
checklist, and they're
the
not here
people.
today.
Okay, all
So
right.
maybe we should just say that we want to put that on the agenda.
Yes, for next month. Yeah.
Who's following it?
Excellent question.
Oh, I
Well,
can
I'm
tell you.
following Qualis.
Okay, we have the
It
quality.
wasn't Qualis. It was IIPR, I think.
I think that's
And
what's going
Disney?
on.
Disney and sorry, not IIPR.
Oh,
LGI Homes.
IIPR is ready.
Is that Jay?
Yeah.
Yes.
That's Jay.
Jay,
I'm sorry.
Hi, Jay.
you're still
Hi,
alive.
I've been
Jay.
working. I'm busy.
Jay is still alive.
Hi.
Wow. Okay.
I'm still
I
alive.
know. We're
I'm
so glad to
surviving.
see.
I'm
We're so glad
surviving.
to talk to you.
I thought we'd talk to
Hey,
you all very soon.
okay.
Ready's following IIPR, and
Sorry, it wasn't IIPR. It was LGI Homes
oh,
and
Mina.
Yeah,
and
that's me.
and Disney. Disney is
Disney is Hoy.
Howell. Yeah.
Wow. Yeah.
I think. Yeah. I don't know. I thought he was okay with
He's on
selling it,
vacation.
but We never got a cell checklist. So I'll send out an email to both of them.
Okay.
Oh, right. You did send that out. Okay. Right. All right.
Is he okay?
Who's that?
Oh, well.
All right, should I,
He's on vacation. He's in Europe, I think.
Oh, okay. Okay.
So,
okay,
okay.
should,
We also asked Mel if he's still interested in joining our club.
okay,
That's what I was going to wonder after all of this.
I will, okay, I'm going to get out of here then.
Oh, wait,
Oh,
Mel.
you're still interested in joining?
Just for a small formality. Are you interested in joining the club? We didn't ask you that. Sorry, that was my fault.
We just
We were
make
just
assumptions.
Yes,
Oh, my
yes, I'm
goodness.
interested.
Okay.
Thank you.
Thank you so much, Belle. Thank you so much. That's
You
great.
did great.
All right, I'm out of here.
Good night.
Okay.
Good
Thank
night.
you. Good night.
Mel reminded me of Roy so much,
Yes.
even including the voice.
Yes. So, Anitra, did you want to say anything about Mel before we vote?
Mel sounds like he would be a great addition to the club. He's knowledgeable.
So.
He already
Very
knows about the SSG. He's been doing it for many years. I'm sure there's going to be a lot we learn from him, as well as hopefully he can learn something from this group.
Okay. Yeah. My 2 cents. He did a huge amount of work. Very diligent. Was always on time. Good communicator between meetings. He would send out emails and send out information. I think he'd make a great addition. So I'm gonna I'm going to make a motion to Jay. What's the wording for this?
Make a motion to
Accept.
accept Mel to be the member of the club.
Accept Mel.
We're going to nominate him.
Accept.
Nominate him. Mhm.
I second it.
I might have spelled his name wrong, but
I think he
M-E-L.
goes with Mel. I think M-E-L, right?
It's M-I-L. His real name is M-I-L. Hold on, let me look at Milburn. M-I-L-B-U-R-N.
So we've
how
been
do you
calling
spell
him
the
wrong the
last
whole
name?
time.
How do you spell the last name?
I'm getting it. Give me 1 second. The last name is
C-R-O.
Crotzer. Crotzer.
C-O-R?
R-O.
Oh, R.
No.
T-Z-E-R. Crotzer. Crotzer. Milburn. And that's M-I-L.
Okay, I got it.
Okay.
Okay. And notify members via email, save motion, Oops, it's not going for some reason. Did I miss something? Oh, no, here it is. Okay, you should have got that one as well. So there's 4
So we have
motion,
4 votes. Okay.
4 things to vote on. Please look
Goody,
at
goody.
carefully what you're voting on, because you could be voting on the wrong thing. So read it carefully. I've done that many times in the past. So
Haven't we
okay.
all?
Anything else before we conclude?
Oh,
Yes, we voted it Mel in. Who is going to send him welcome email, file, get his into my iClub.
oh.
I
I
didn't
will
receive any
I
of
will
that.
do
I didn't get a welcome email and a file and all of that.
You see that? Nina.
Not
I'm
really.
sorry,
Got
Nina.
it.
I'm
Oh
having
my
trouble
goodness.
finding the templates.
Ooh,
Oh,
backlash.
I can add him to the Google Drive. Maybe we should do a checklist so we know what needs to be due. There's several things.
Yes,
But
Google Drive and
on that one. I'm going to defend that one.
we can have
Oh,
a
this is funny.
meeting in the next meeting that we have with the people that have duties. We can talk about that then and then send it then in that way. I've seen the thing that we send where when a person joins, it's like
Yeah, it's a short email
yeah,
link to the drive, just welcoming you to the club. I sent you something, probably the motion passed, so it would have been that time. But anyways, yeah, it's also in the executive documents. I
yeah,
know there's a link to it for
yeah.
the to send out, so it should all be there for you. But let me know if you can't find it, I'll pull it up for you.
I'm sure we can find it.
So
I
Mina,
can't find the templates though. Go
Mina,
ahead.
you need to you owe Anitra a welcome email.
It's square.
Yeah, I don't get those. It's
Okay.
just like, come on here, girl. No, I'm just joking.
How'd you find out you got in?
Huh?
How'd you find out you got in the club to show up the next meeting?
Okay, I keep showing up.
Well,
So you mean not an
Jay,
official person, not officially in? Is that what you're saying?
no, I mean,
Yeah.
I did not send her an
She
email.
does. She keeps showing up, so I don't see what the thing is.
Well, I'm saying that you feel this anyhow.
Jay, do you know
Hilarious.
where the welcome email resides?
We don't have, I used to just write up, but there was no template. I don't, oh, let me take a
Oh,
look. Hang on. Let
no, it's okay.
me take a
I've
look
looked, I
very
couldn't
quick.
find it. I will create one. Okay, I'll
Okay,
create one
administration.
and
I
I'll send it.
already see his mind rolling. He's going to go into Copilot and come up with something really nice, or one of those
That's
Yeah,
right.
IA.
You got it.
yeah.
Copilot.
No,
Yeah,
So you
one
don't
of
even
the
have to
AI.
write things anymore. That's
Member
wonderful.
yes.
information. It's
I'm
member
not
So
sure that's
information, the
wonderful.
bio.
so Jay, the other question is who sends out the email? Is it the president, the secretary,
President, yes,
the
yes.
president?
Okay.
Yeah.
We're
I
gonna.
Guess
will.
what? You,
I'll
oh,
do it.
Anitra, we need a
So
Well,
photos
wait
of
a minute.
Anitra.
Who's going to
okay.
I
send
don't like
Anitra? Who's going to send
those. I
Anitra the
don't like
welcome email?
photos.
As a lowly treasurer, I'm gonna write the email for my boss Anitra, and
Oh,
then I will send it to her. How's that? Is that okay?
and in the meantime,
Yeah.
I'm
So
gonna
you're going
see
to
what
send Anitra the
AI
welcome
can do
email?
for
Is that how
me.
that's going to work?
Yeah, no, I'm gonna send her a
He's gonna
welcome email
format it.
The email to send to Mel.
template to Mel.
Whatever.
Yes.
Okay.
Introducing
Who's going to
Chat
send Anitra
GPT.
her welcome email?
Well, ready fine, because I could have got him to draft me a template then. So, good thing.
So okay. Anything else? Is that it?
I just put in Chat GPT, Chat GPT, welcome email for a new club member. It didn't give me much. Yeah, it did. It's pretty cool. But I'll see what you come up with. But that's the first time I ever used it, so that's interesting.
Well,
Okay.
what is that?
Great meeting though. I like the challenging, how you challenge each other. That's what I always liked about this group, as opposed to other, some clubs do challenge each other, and I think the ones that challenge each other are very interesting because that means you're listening, you're following, you have input, your thoughts count, and that's where greatness comes from, to me. So I really enjoyed this.
So one of the key requirements when you hire board members that they have to have very different backgrounds and opinions. And if you companies that have diverse boards typically do very well. Those that don't have diverse boards don't do as well, and you get into a bunch of yes people, and there's no debate, there's no arguing, and so you end up with very sort of one-sided views of things. So
It's not arguing, it's challenging.
challenge.
Yes.
Sounds like the
Okay.
people around Musk.
Yes. So Anitra, I just told it to write this thing, but then it used my name because I have an account with ChatGPT. So what I'm going to send you is
Has your name on it, but don't worry about it.
yeah, substitute my name with yours.
Okay,
We need a
does yours
picture
say?
of Anitra. We need a picture of yours.
And I think no, this is really stupid. It's not. This is no. I'm not using this. Hold on. I have to redo this.
Uh-oh,
It
uh-oh.
says, I hope this message finds you well. My name is Hanny. I'm excited to join. Oh,
Okay.
no, it's doing it as though I want to join, which I don't.
Yeah, it didn't quite understand. It didn't quite
Mine
understand the assignment.
Mine says, welcome to International Model Investment Club. Hi, Milburn Krotzer. We are thrilled to have you join our community. Here at IMIC, we're all about, and then briefly describe what we're about, exploring whatever it is. Your membership opens the door to whatever it does to get you started. Here are a few things that you might find helpful. Our website, join the conversation. So you would kind of adjust that to whatever yours it is. Mark your calendar, stay informed. It's more after that, but I'm just reading the highlights. If you have questions or need assistance, feel free to reach out to us. Contact, email, phone number. Once again, welcome abroad. We can't wait to get to know you and see what we can achieve together. Best regards, your name, your position, role, club name, contact information, social media fit links. The end.
Wait, did you just write that?
Chat GPT did.
Oh, okay. So, all right, excellent.
It says a welcome
Your
email for
your
a
chat
new
GPT
club
understood
member.
the assignment. Okay,
Yeah, and you say that
that's
doesn't work.
great. That's great. Depends
Okay.
on the mood you catch chat GPT in. Is that what it is?
That is so true. I was working on two computers today. I put the same thing in Copilot on one computer that I did the other, and it came up with two different answers. But they were similar, but it wasn't the same, word for word. So
Okay, I'm sending it to you now.
okay.
I'll send it to everybody actually, including Mina, who then can use it to
And hold on to it for next time, right?
yeah.
Gain my innocence.
What is the Jane's role? So Chris is the vice president. Jane is what? Is
Sorry.
Jane is you are treasurer? I'm just update the bio to put the treasurer. Jane is Jane an officer?
Jane.
I don't think so.
No, Jane
You
is
don't think
not.
so?
No.
Okay.
No.
Okay. Chris is vice president. Okay. Got it.
I gotta say, are we recording still?
Oh,
Oh.
yes, we are.
For
Yes,
the
we
record,
should.
once more then.
I should have stopped the recording. See, that's what happens when Joanna's not around.
I know.
But we were talking about business still. So,
We have to
yeah,
try never to let this happen again.
you have to make sure you modify that before you post it, I guess.
Well, you're very optimistic. 'Cause no,
Who?
how to do that.
No,
That was very nicely said, Annie.
Isla,
Very nice.
Isla has to do that. Isla does that. But are we
Does what?
recording? Are we recording still?
Yes, we are.
Yes,
When
we
are you
are.
gonna stop it?
You
I
can
don't
stop
know.
it
When he
now.
presses the button. Whenever he
Wait,
presses
is
the
it
button.
stopped?
But we'll have
Oh
to get
wait.
Joanna to help us. Yeah.
Oh my gosh. Did we already record? Did you guys hear any? It's a stopped.
Stopped?
Do you
Did
guys
I
know
ever
if the
start?
meeting was recorded tonight?
I don't think it is because I don't see a recording thing.
No,
Nothing
no, it
saying
is because no, I started the recording.
Okay, then somebody
Hey,
stopped. It's not recording
did you
right now.
stop it?
No,
I
I
don't know who
started.
did.
I did. I did.
Okay,
Do you stop
but
it?
right now it's not
Stop it?
recording. Somebody stopped.
I don't. It wasn't me, but I
Oh.
started it. I hit start recording at the beginning.
Okay, we'll find out.
Okay.
We will.
Hopefully.
Right now it's not recording. It's not recording.
We can't wait for
Maybe Chris
Joanne.
did.
Okay.
Maybe Chris did.
I wonder if I can ask a general question.
Sure.
Okay, you know, on Morningstar, the website, when you go to
Mm-hmm.
the key ratios and you look at growth and efficiency ratios, it always comes up
Mm-hmm.
not available.
Hmm.
Which ones?
Yeah.
Sorry.
Yeah, if you
But
go
for
to the
all
Morningstar,
stocks or just particular stock?
no, any stock, you could punch in any stock, you could look at the key ratios, look operating and efficiency.
I get numbers.
No, for me, I get there
For the
is no
stocks I'm looking
operating
for.
efficiency data available.
Let me check. Give me 1 second. I'm gonna go.
Yeah, let me look at that because I think I get stuff.
Yeah.
Anitra, we need a picture of yours in the bio.
A picture? Oh gosh.
Anitra's picture. We have yours, Isla. You have a good picture.
I hear you. I don't like social media and I don't take good pictures.
No social media. I think it's just
Internal.
for our club.
Internal.
Other people cannot see it. Just our club.
Hmm.
Just for
I have
our
to
club.
dig. How far back you want me to go?
How
I'll
far?
send
What?
you a picture when I was 10.
Um, Piero, what did you say? Which one?
Yeah, you see the operating and efficiency?
Show your screen, Haney, please, if you can.
Okay, 1 second. 1 second. I will.
Thank you.
Yeah.
Where is it? Here. Okay.
Putting in a company.
Key metrics.
No, this is Morningstar, is it not? Yeah.
Yeah,
Yeah,
Yes.
I'm looking at
that's
Morningstar now. I'm looking at Microsoft. I'm looking
So you
at
go
key
to key
metrics, and I have numbers. I have
and then
numbers.
profitability and efficiency, right?
Yeah. Oh no,
Yeah, I have
go down to
financials.
the bottom.
Sorry.
Uh-huh.
Go to the bottom
Down
of
to
the
the bottom.
no. I have a different view. Okay, valuation. This is the new format I guess they have. I guess
Yes,
I must be stuck in the old format.
Which stock? Oh, okay, so you didn't put a stock in?
I did.
Ticker?
I just put ASML, but
Okay, and did you get numbers?
yeah, it's right here.
Yeah.
Okay, because I put in Microsoft and I have numbers. So
Piero, did you go in through Better Investing's SSG?
No, I went outside.
Morningstar.
Oh, okay.
yeah,
Because
I never go through that. I go through my library and I still have numbers.
yes, yeah.
Yeah,
Yeah.
Microsoft. Here it is.
Yeah, I have numbers.
Um,
I know that on occasion I have stock in that it said, unavailable. But then if I try again the following day, it's fine.
Yeah. Well, for me, it's been out for about 2 weeks now. It's like, my website is morningstar.com. Right?
Oh, you use the
Morningstar.com.
real
Wait,
Morningstar.
you have an account with Morningstar?
No, I'm just using the open public.
There's
oh,
nothing
maybe
open
that's
in
why.
public about Morningstar. Morningstar is wants the people to pay, whether the library pays. I don't think there's anything free on it.
Yeah, there isn't.
Yeah. So I'm not getting those operating and efficiency ratios.
Well,
Yeah,
wait.
no, I think you have
How are you
to.
accessing their website?
At morningstar.com. That's it.
Right. So you just put morningstar.com in and you
Yeah.
don't have an account with them.
No, I don't. I just have
Well,
www.
that may be why you're not getting any numbers.
Yeah. But I
Because
found out.
they don't give them away for free.
No, but that's
You
probably
have to
why.
have a way in. Yeah, you have
Okay.
to have a way in. Sometimes, through a library,
Yeah.
Mhm.
with your own personal account.
Yeah.
That might work.
Yeah, I think so. But I even though I don't have an account with them per se,
Uh-huh.
but I found another little way around it in the free open source.
Have you considered that library in Virginia, that
Fairfax, Virginia,
Fairfax, right, that allows you can be a member without actually living there. You can be
$27
considered
a
a
month.
member and you can get
Mhm.
access to Morningstar and Value Line through them.
Yeah, the
And I'm
value
This,
putting,
this
I'm
is what
putting,
I'm. Sorry.
I'm
Go ahead.
putting that link into the chat right now, so you'll have it if you want it. Go ahead. I'm sorry.
No, I was just going to say this is what I have up right now is the general site, and yeah, it doesn't have the those things on it. The
Yeah,
those
valuations.
metrics. Yeah.
Yeah, they
What
want
about-
money for that stuff. They want money
But
for that
here,
stuff.
check. Here's this is the library. I entered through the library,
Yeah, yeah.
And
yeah.
you have the stuff there. Yeah.
and you have it right. So you go to key metrics over here,
Yeah.
which doesn't show up on the general site, and
Yeah.
then here's
Yeah.
your profitability. Now,
Yeah.
there's another thing here that you guys, I don't know if you're aware of, but if you look at these years, right,
Mm-hmm.
and you put them in the Bakul ratio spreadsheet, and one of the years is negative or something like that, you just go down here and you can view the form 10K for that year, and then you can search to see why. You know, if you're looking for something in particular, you can just click on the year and it'll show you the
Mhm.
10K.
Mm-hmm.
This takes a
Good
while.
job.
Yeah, see right there.
Oh, look at that.
Yeah, and then you just do I think is it Control F or Alt F?
One of them.
Control F, and then you can search here
Yeah.
for
Search for a particular term, right?
yeah.
Mm-hmm.
So that's a kind of a cool feature that they have. It's the links to each year's 10K, so you can search for
10K,
stuff.
right?
But
Yeah.
if it's negative, so would you be making it up? It's negative.
No, I'm just saying, like, if it's no, you're not.
Like if you want more information, if you want more information on why or what happened,
Oh, why? Okay.
then you could click through to the 10K and they hopefully will
I have a
explain.
question. Where do you find a year over year pre-tax profits percent change on that?
year-over-year pre-tax
Year
profit.
over year pre-tax profit.
Um,
Go up. Okay. Key metrics. Try growth.
Yeah. Go growth.
Try growth and see if they have pre-tax. They may not have pre-tax profit because
It's on the quarterly report.
not a lot of places use pre-tax profit. They use gross, operating, and net, but not a lot of places use pre-tax profit. So they
But
may
it's
not
on
list
the
that.
it's on the new quarterly report in Google Drive. That's what it's asking for.
Yeah.
That's where I got stuck.
But you can use
oh, that's
operating
you get.
income.
No,
Yeah.
that's from the SSG.
Yeah.
SSG specifically gives us pre-tax profit, but a lot of
Yeah,
other,
year over year. Yeah.
Yeah.
yeah,
How does it
but they
give
have
you
growth here for
year?
year over year, 1, 3 year, 5 year, 10 year.
Yeah.
So do they have pre-tax profit here or no?
No, not a Morningstar.
No,
No.
they have earnings per
Yeah,
EBIT.
most places don't talk pre-tax profit. They talk gross, operating, and net.
Yeah. Operating margin, you can use that as a substitute, like a stand-in, kind of give you the idea.
Yeah, except that there's a bunch of stuff that comes after that. That
With
makes
it,
it
yeah,
different.
I know. Yeah, but you can use
Yeah.
it as kind of a surrogate, so to speak.
Okay, it's my bedtime, so I'm gonna
Oh,
exit.
I
Yeah.
know.
Haney,
I
I need to
second that.
ask you a question. Haney, I need to ask you a question.
Yes, sir.
Okay, you know the Bakul ratios, the spreadsheet?
Yes.
Okay,
Mhm.
so when I'm having a lot of trouble with it, and the problem is that, you know, when you give me the spreadsheet with the numbers already populated, right? In order to figure out a different company, I have to wipe out those numbers. So I highlight that
Right.
area that has already been populated, and I right-click it, and I say remove contents. And I tell it to remove numbers and letters, nothing else.
Right.
Okay, then I go to Morningstar or whatever the website is, and I know the first 3 ratios are all percentages. Now, so you say it's point and copy and paste, strict copy and paste. So I do that, and the numbers are not in percentage format. So what I then do, I highlight those first 3 rows, and I say make this a percentages. So the percentage sign comes up, and it screws up all the calculations on the left-hand side.
Okay, hold on a second.
I have an easier way of doing it. I just
Okay,
highlight the cell and hit delete. And then
okay.
copy and paste from Morningstar in there, and it goes in there with the percentage. If I highlight the percentage sign,
Yeah.
then that ends up in there with it.
Wait. When you say when you highlight the cell and you say delete, but there are a lot of things in that cell. What is it that you're deleting?
It's
Are you
just one
deleting?
cell. It's just the one cell, and I hit delete on the one cell, and it deletes what's in that cell.
Okay, but what are you deleting? Are you deleting the numbers, the letters? Are you deleting?
Okay, so when,
Okay, hold
just
it,
like you
hold
said,
it.
when you first open it up and it's already populated, but it's not populated for the company that you're trying to do. So
Yeah.
you need to get rid of those numbers,
Yeah.
right?
Yeah.
So again, I mean, it's tedious, but cell by cell,
Yeah.
as I'm trying to populate the numbers, say for 2022, and I want to populate the ROE for 2022, I will
Yeah.
click what's already there, hit
Yeah.
delete, and
Yeah.
then copy and paste from Morningstar in there, and it's there.
Okay, but in that
Can I just hold on a second? Hold on.
Yeah, go ahead, Haney.
Watch.
I lose my numbers, my color sometimes. It's not green anymore. All that goes away. Go ahead.
Okay. What do you see? Do you see up here the minus 8.34%?
Yeah.
Uh-huh.
And
Yeah.
here it's 6.4. So if you look in any of these cells, right, over here, whatever, they're all just numbers. So what I do is I just take this, I highlight all of them, and I hit delete.
Delete.
Right?
Ding.
Yeah. And then they're all gone, right?
And you
Now,
don't mess up the formula?
You're gonna get this average thing divide by 0 here, which is fine. Okay.
That's fine. Once you put some numbers in, it'll all work. Right.
Then I'm just gonna go to Microsoft and let me go back here. So the first one is return on equity, return on invested capital, and free cash flow to sales. So, okay, so let me go to Microsoft here, return on equity, key metrics.
Second one.
Where?
Second one.
Oh, here, yeah. So now, sorry, let me just go back one other thing here. So this is starting at 2014 and it goes
So you have to go to 10 year.
So we're gonna go here and I'm gonna switch these around. See this little reverse dates button?
But you also have to go to the thing, right?
And 10 years.
Right. Okay.
And then return on equity, I'm just gonna copy these. Is that right?
Yes.
And then
16, 17, 18, 19 to 24. Okay.
yeah, copy.
16 to 24. Okay.
Okay, and then I'm gonna go here.
Yeah.
Oh, sorry. So before I do that, what's the last fiscal year? So it's 24.
24. No,
So
24. Microsoft is 24.
Okay, 24.
Yeah, they just had their fiscal year June 30th.
Okay.
So
and their 10K is already out. So
yeah, it's 15 to 24, right?
Yeah.
Yeah. Right.
Okay, so then I'm just going to come in here and I'm going to paste.
Yeah.
Wow.
Now, for some reason, hold on, why did that happen?
Oh, that's because the trailing 12 months. It was just an
did
extra
I-
little, yeah, extra little.
Right.
Did I
So you had
put
an
the-
extra, right? You had an extra. Okay.
Yeah.
Okay, so
But Henny, how did you get the
And you
percentage?
got the score and the average. That's great.
where's the trailing 12 months? What did I? This is the 0630. That's the last.
That's the fiscal
quarter.
year. That's the fiscal year.
So that one is the 3713. That shouldn't be in there.
Yeah.
So I just delete this.
Yeah.
Okay.
Yeah.
And now see the average. It's calculated the average.
Yeah.
And the score.
It's given a score of 9.
Yeah. But okay, Haney, when I go to Morningstar and I copy and paste those numbers, the numbers are just raw numbers. They're not percentages.
It's like the formula gets lost.
Whatever
It's the
percent sign that gets lost somewhere in there.
There's no formula in these cells. There's just the formula here.
Wait.
Now,
There's a
if I,
formula because from 2015 to 2024 came up with number 9. The formula is all of these is what is over whatever over 15. That's the formula.
Yeah.
the
And which
formula,
one
Right,
go?
the formula is in here, is in the score column, and
Yeah.
the average just
average
takes the
column.
average.
Mhm.
But
Okay.
these things are straight numbers. Now, if you look up here, they're formatted as a percentage.
Okay.
See, it says percentage up here,
Right.
Yeah.
right there.
Mhm.
If you can format at them as whatever, but if you
Mhm.
format them as a number, they might not work, right? So
Okay.
so you have to format them as a percentage. If I go
And if you
number
format
here,
them as a percentage, then the percentage sign will show up.
yeah,
Oh.
so
Oh,
it's a
okay.
number,
Okay.
and the average is 0.34. It's still okay because it's a number, but you want to
It's
show
confusing.
it.
You want to
Yeah,
have it.
you want to
percentage.
show it as a percent.
Can you do another row again, please? Just one more.
Yes, sure. So
Yeah, great. Because I was
okay,
doing them one at a time. It was very tedious, but it was somewhat enjoyable. I have to
I'm
say
gonna
that too.
so
You're so funny.
return on
Invested
invested
capital.
capital.
Right.
Yeah.
Okay.
This time
Hey, Haney, the numbers that you're copying now, they're all in percentages.
could that be the website that you're going through? Was that
I
It
think
could
so.
be.
Yeah.
Maybe you should try the Fairfax thing.
Yeah. I should try that. Yeah.
So it's right here, right?
Yeah.
I went to
Yeah.
624. I'm gonna copy.
Yeah.
Go here, and then go to 2015, and then paste.
Yeah.
And paste it. Match destination formatting. You have two options: keep source or match destination. So you should
we have to
match
match.
destination.
Oh, okay. Match destination formatting.
Okay. All right.
Now be
Right?
careful
Because if
because I
you
don't
That a
think
new thing
ours
in
say the.
Excel?
Yeah, but his
Sorry.
Excel does not look like mine.
Yeah, it's a new thing in Excel, I
It
think.
looks sophisticated.
They've made some
But
changes
now
in
I have
Excel
Excel for
recently.
Apple. I have Excel for Apple, and I know it's not the same.
No, it's
no,
not.
Excel for Apple is different.
It is. It is.
Apple
Slightly
uses different chips.
So free cash flow to sales is where it's in cash flow.
It's
So
on
let
cash
me
flow,
go to
right?
cash flow, right?
Yeah.
And free cash flow
In the middle,
sales
right?
percent. Okay. Now one of these there is a problem with it, and
Okay. No, okay. Yeah. That's.
so I'm gonna do a copy again
Mm-hmm.
and just go over here and I'll paste in here, match destination, and there it is. Continue. Oh, which one is it? Okay, hold on a second.
Let's go back.
I think
CapEx.
it's the free cash flow net income. I don't know what. It's one of them. You're
Okay.
right.
CapEx as a percent of sales.
Yeah.
Okay.
Yeah.
It says 10%, right? Less than 10%. But these are actual numbers. They're not.
Or in
They're not in
decimals, right?
percent.
You're
They're
in decimal,
decimals. Yeah.
right?
So that one is in financial health. So let's go there, right? And if you
Yeah.
look at financial health, right here,
Bringing this up.
CapEx as a percent. See, these are not percentages. These are numbers.
Yeah.
It says CapEx as a percent.
As a percent of sales, so it's
Okay.
actually 6.35%, but
Correct, but they don't show the percent sign. If
No.
you look at the other one that we were looking at,
Yeah.
what was it, cash flow or
Return
whatever?
on investment
See
capital.
the percent sign in the
Yeah.
cell?
Yeah.
you know what?
Right.
It's probably because in the one you were just looking at, none of those numbers are percents.
Well, but these are
You know what I mean? I know. Go back to the one you were at. Was it financial health?
yeah.
So none of them are percentages.
No, they're not.
Right. So the only thing that would be percentage would be that last line. And they just have decided probably not to do that.
Oh, I see
Okay.
what you're saying. Okay.
Since all of these numbers are just decimals, let's just leave that one decimals too and make it easy on ourselves putting the numbers in.
But see, you've got 3 percentages, and then free cash flow to net income.
And
is
it's
just
probably very annoying to the people who have to sit there and put that in.
yeah.
Probably very annoying to them that they have to switch up.
Yeah. But anyways, so all I said was just copy these as they are.
Yeah. But
right?
thanks for bringing that up. That was a
Yeah.
wonderful thing to talk about.
And then,
That was
so
great.
so then you just copy this one, right? And then
Yeah.
we'll go here. And I got it right here. It says
Yeah, but you
number
know,
3,
we don't
point
read.
number 3. You don't read.
We don't read.
Okay, you can
So that
paste it. You can paste
I,
it without taking it
you
out.
don't
That's
even
what I
have
was
to
going to
delete it.
say.
You're
Yes,
right.
yes.
You can paste
I
right
just
over.
learned that the other day.
Yeah.
Yeah.
So that's the other.
I would rather start plain.
Yeah,
That's
because
just me.
then you.
That's just me. That's just me.
No, because then if you delete all of them, then you can see what you're still missing and stuff, and you don't mix things up, right? So you have all of these are like clean, and now you
Then you just
know
stick stuff in there.
just stick
Why are
stuff.
you not losing your colors, like the green colors? Mine turn all white even when they're right. Sometimes.
I think it's because I have this is all done with conditional formatting. So if
Of
you go
course.
here and if you manage the rules, there's a whole bunch of conditional formatting
Oh
here,
my
right?
goodness. Here we go with conditional formatting. Oh
And
my God.
Yeah.
the
Oh
So
my
template
God.
you sent me today had
Listen, be
numbers
careful what you
already
ask
in
for.
it. It's not an empty template, but I can take the numbers out. That's not a problem.
if I think in Excel for Mac, the conditional formatting is a little bit different. Maybe that's why.
Probably.
Okay.
I do have a Mac. I might be able to figure it out. I can try to figure it out.
I tell you what, the little class I took in Excel was the most fun. I felt like anybody who could do it was a genius. And even if you weren't a genius, but you learned how to do this, you were going to be a genius by default. Because this is the most amazing software ever. It just thinks for you and does everything. That was true. It's really
It's wonderful.
amazing.
It's
It
very
makes
wonderful.
charts and everything. And I was like, oh my God. I was the one that kept saying, oh,
I'm very grateful to know
It's
somebody who knows how to work Excel.
it's very, very sophisticated. There's a lot of
there.
stuff in here that you just kind of scratch the surface, but there's a lot of like really cool stuff in
Gates
here that
Gates did
Yeah.
his thing. He did.
It's a wonderful thing. It's a wonderful, wonderful thing. Thank you, Hanny.
I think I told you this story before, but I was a junior. I wasn't even a junior engineer. I was an intern for British Petroleum in Calgary, and we were doing all these simulations on oil wells, and we had these mainframes and punch cards. I don't know if you
Oh, lovely.
Yeah.
know what punch cards are, but anyways.
Mm-hmm.
So I was doing punch cards, and then one day my boss comes in and he knocks on the door. He comes in and he says, "Hanny, he's got this trolley, and it's
Oh,
got all these boxes on it." And he said, "This is for you." I said, "What is
all the
this?"
punch cards in the world.
No. He goes, "This is some new stuff that we just got. I don't know what the hell it is. So can you spend a week or something, figure out what this all is, and then at the end come and give us a presentation about how it all works?" I said, "What is it?" He goes,
He
"This thing."
said, I told you, I don't know.
He says, this thing is called a PC, and this is something called Lotus 123.
Oh, get out of here. He did not know what Lotus 123 was.
Nobody did.
Oh, he
We
didn't know
didn't
what.
know anything. Nobody knew anything because it was brand
So what?
new. It was
Somebody just came in and plopped it on his desk and said,
yeah.
"Here, work with this."
The IT guys thought this, because we're doing all this simulation and stuff, and they're trying to reduce the workload on the mainframe.
Oh, they
So
were being
they,
mean to y'all. They were being mean to y'all. That's what they
and
were
then
being mean to y'all.
and then when I got started, my first job, um, my boss came in, and again we were doing these ANSYS simulations, and he comes in and he gives me a check for $24,000, and he says, "I
Thank you.
want you to."
Well, thank you.
And no, it wasn't for me. He goes, "Go,
But you say thank you
go
anyway, just in case.
yeah." He goes, "Go down to the computer store. There's these things called 286s. I want you to get 2 of those and 4 monitors." So I went down and I
Wait, a thing called a 286?
Yeah, 286.
Oh my
Computer.
God.
Yeah,
Oh my goodness.
yeah.
Oh my goodness.
And then I said, so I went and got everything and I set it up and I said, why do we have 4 monitors and 2 computers? He goes, because I'm taking them home. I'm taking one home. And
Oh, get out.
so he used to disassemble. We'd work on the thing, and then he'd unplug everything, and he'd carry the box, the computer, on the subway, and he'd take it home, and then he'd have the monitor there. He didn't want to carry the monitor on the subway, and then there were no laptops, so he kept moving
That's
this thing
true.
back and
That's
forth.
true.
Yeah,
So he had his own mobile computer, huh?
yeah. Except he kept dropping it, and then he'd get pissed off, and he'd
And
tell me
wonder why it stopped working, right?
yeah, and then he'd yell at me for buying a piece of junk. I said, well,
Well, you dropped it on the subway, sweetheart.
yes,
That's
exactly.
concrete. It's not going to do well after that.
Exactly.
That's because he told you to go buy a 286.
Yeah.
That's hilarious. A 286. That's hilarious.
Yeah. But the guy was a genius, though. He was, I have to admit, but he was just.
Well,
Oh
all
my
geniuses
goodness.
like something.
Lotus 1, 2, 3. Okay. Okay.
Haney,
Yes, sir.
you know, when you wipe out these numbers for the next stock, right? I wipe
Yes.
out the numbers and I say, and it says
Uh-huh.
remove content, and I say remove only the numbers and the text. I'm not removing the formatting. Hopefully not.
I don't
Maybe
know.
you might.
Yeah, because when I paste in the numbers will show up as pure numbers, not percentages, right? And then, but I think when I paste it, I should say match destination formatting.
Mm-hmm.
Yes.
And I don't.
And make sure the number thing at the top says percentage.
Yeah.
But if you just delete, it should be okay. Right?
Yeah.
Instead of, just say delete. Don't get specific with it. Because if you start
Just say
telling it
delete.
text and numbers, then you might mess with it's possible that you might
Yeah.
mess with the formatting.
Yeah. But I could format it.
I'll send it again to you. I'll save it right now, and
Yeah.
I'll send it to you
Blank.
blank. I'll send it to you guys blank, and then you can, because I don't know
That's
which one you
wonderful.
have actually. I've made so many because I keep finding little mistakes. So maybe you
What kind of
have
mistake?
an older one or something. So
What kind of mistakes?
sorry.
What kind of mistakes?
Formatting mostly, like stuff doesn't come
Yeah,
out the
formatting
right
is fun.
colors
Yeah,
and stuff like that.
Yeah.
Like, and
formatting
see
is
this
fun.
divide by 0 shouldn't be there. So I can get rid of that. I'll just put a function here. So
Okay, looking at this one, isn't there supposed to be a red bar between 3 and 4 that says something?
Yeah.
yeah, but I deleted everything, so there is no red bar.
Oh, okay.
Mm-hmm.
Oh, okay, hold on. Sorry.
No numbers to work with.
Okay,
Oh
so
my.
now if I
Oh my.
they're all averages, right? Yeah. Okay. So
Yes.
now. Okay, so now if you have a blank, it's not going to give you that weird thing here.
Yeah.
So and I'll just save this again, and then I'll send it.
How many copies do you have, Annie?
I'm trying to delete them. I've got quite a few, but I do it by date. So I just take the latest one. So I've got like maybe 10 copies or something that are.
I'm sure, because every time you work on it, something else, yeah?
Yeah, and I keep them just to see like what I changed and stuff. So
Yeah.
but here I'm just
Gotta be able to compare and contrast, yeah.
yeah. So
Yeah. Maybe you can kind of put down to a side saying that 1, 2, and 3 are percentages, 4 and 5 are numeric, 6, 7, 8, and 9 are percentages, and 10 is numeric.
But you can see it's numeric. It doesn't have a percent sign.
It says it has percentage on the financial ratios column.
Yeah, on the number.
But 10 doesn't have a percent, and 5 doesn't have a percent, so you know it's not percentage.
No, but number 4 has a percent, but it's numeric. So
It's still a percentage.
So read note number 3.
yeah,
It shows this number without a percentage sign.
Yeah.
Right. So it's never going to show that way because they didn't put it in their data, so it's not going to transfer over.
Oops. I shouldn't have done that. Yeah, that should be okay now. Okay, so I'm just sending this out
okay.
to everybody. And then, so that's 2408. That's the last one.
Okay.
All right. Can I go to
08,
sleep now?
08
Yeah.
or
You
09?
can go to sleep now. Thank you.
It says 08, but
But it's really 09. Never mind. Never mind. Don't change anything.
yeah,
It's fine.
I'm gonna send this to Bakul as well. I guess because it's
It's his stuff. That's true.
his stuff.
Yeah.
Oh, and then thanks for the instructions and the definitions. That was great too.
Mhm.
Oh, okay. You actually read that. Okay.
Oh, yes. Yes. You sound surprised.
I have a question. The template for the new quarterly report looks nothing like what Christopher read tonight. His was like a lot of information. I don't understand how it went from one page and a little bit of a second to that. It doesn't look like it's the same. I'd have to go back and look at it, but it just doesn't look like the new quarterly report template.
Hmm.
Yeah.
I'll figure it out another time.
What, you
Good
mean the
night,
one that
everyone.
he read? The one that he read during the meeting?
The one that he read during the meeting. It had a lot. It
Well,
just,
you know, Jane is very detailed
yes.
and puts a lot of information in her forms. So that may have had something to do with how it looked different.
Okay. Okay.
Jane is more detailed than most of us and puts a lot more information into her stuff. Yeah.
So it
Okay.
doesn't have to look like that.
I'm gonna sign off, and if I sign off, I don't know if you guys will. Let me see if.
Right. We should all go because Hanny got to go.
It's okay. Good
Thank you,
night.
Hanny.
Okay. Thanks a lot. We'll talk to you next month.
Next month.
Everybody vote. Don't forget to vote.
Yep. Okay, good night all.